All. Sorry for delay in starting today's meeting. The blame entirely lies.
No, don't say that.
Okay. Welcome to today's meeting of Banking Financial Services, Insurance and Market Study Group. Today we have actually a very enriching sessions by two expert panel of speakers. One, Mr. Ramesh Gawade on risk management and assurances on risk-based supervision, and another is by Mr. C.A. Gagan Kothari on NBFC's finance credit, just basically a CFO level perspective. And we have another session on tax audit and direct tax issues by the C.A. Anil Sharma, our own panel of speakers. I'll request Manoj to take the session forward, and then Mr. Ramesh can start.
Thank you, and welcome everybody. It is indeed a pleasure and privilege to be with all of you once again, and we have a excellent panel as usual, and a series of roundtables, deep dive into various topics suggested by the members themselves, and a very high level of expertise. Ramesh is here with us, Senior Vice President of a top bank, top 50 companies in India, leading fastest growing bank, right? And we have lots of, I acknowledge, lots of senior people here. Aditya, Citibank, Senior Vice President, Santosh Maller, he is author of 7 books on financial reporting and signs the balance sheets of some of the largest corporates, including very large NBFCs. Naresh, Sunil, and lots, Suyash. And we have a CFO series, director series ongoing, which is super successful. There are lots of expectations from the regulator and stakeholders on the changing role of the board, changing role of CFO. So you have it directly from the panel speakers and highly interactive sessions. And Satnam Singh has been a CFO with a large retail company, so lots of rich experience. So we can start with looking into deep dive into risk management, assurance services, how a banker looks at it, and practical and relevant issues from industry point of view, practice point of view, and lots of people would be going through the session interactive deep dive on this for about 40-45 minutes. We'll make it interactive. We have lots of our team who looks at concurrent audits, risks people from the profession. So make it interactive and make full use of it. And we have an open house always. BFSI CM Roundtable is known for open house. Latest topics, as we say, till yesterday or today, are discussed. So ast RBI development, latest SEBI development, or latest merger or demerger in the corporate sector. Even if the announcement is done last night, the team does a deep dive and comes out with the first cut, which is often the best cut. So that's it. So Santosh, I mentioned Santosh Maller, author of 7 books and a lot of experience and research in accounting, opinions, and lots more. We'll hear more from Santosh on latest developments on evaluation requirements of RBI, which has come out next week in the open house. Ramesh?
Yeah.
You can introduce yourself in your own way,
Yeah.
And then we get to the deep dive.
Okay. So, good afternoon to all of you, and welcome series of our BFSI and Capital Market Group think tank. As I joined newly in this group, maybe around last month only. So I was found this group to be more interactive in the session of learning perspective, not as a seminar speaker or something like I have the extra knowledge or something like that. So there are two ways of thing in learning in the professional life. One is thing is that one has to listen. And other thing is, one after listening the thing, if we need to have an expertise in some area, we can give the knowledge to the other people. So that way we grow as a community. So thank you very much for giving this opportunity, and I really appreciate the way this group is performed. And now coming to the topic of today's discussion. The today's discussion is we thought in the last meeting where we thought that in RBI perspective, like bank perspective, there are many other many areas where the still we can give the more knowledge to our industry based CA, or maybe the CA which is in practice. So the entire gamut is to cover at least some regulatory perspective, some latest development, how the internal audit is taking care of, how the concurrent audit is taking care of, what is the risk management, what is governance. So basically, as far as my industry knowledge goes, I've done my specialization in internal audit, and I'm in internal audit since 1998. So almost in every up and down in the market and all sorts of big gamuts and all these things, and I know what is the root cause analysis behind that also. So by seeing all these things, what we can suggest here is that since the topic is so vast, regulatory, audit and all this. So what I thought is that, to concentrate on something which at least giving is the bread and butter to the CA community, and that is a concurrent audit. So I drill down to this subject. It was like first take this subject, which is giving the opportunities to the CA to earn, and earn, and not only earn, but in order to take the more professional knowledge and prove ourselves for the next step. So that's why I drill down to the concurrent audit. Later on, we will cover on the supervision part, how the RBI is doing the supervision, what is their expectation, what is their tranches, what the risk management is there, what is the culture in the bank, what is the compliance. All this stuff we'll cover in step by step, because the time limit is 45 minutes. Among that, I will be talking around 25-30 minutes, and then the next 10 minutes will be available for all the people to have the open forum for the question and this one. So begin with this. This concurrent audit system in the banks, particularly as far as the NBFCs are concerned, there is no specific circular in the RBI domain for the concurrent audit. But from the RBI perspective, we have a very specific circular for the banks. So in this today's session, I would like to touch base on the three aspects, which is the regulatory guideline, applicability and coverage, and opportunities for the CA, either it is practicing or whether in industry members. So that is why I first taken this topic to talk about more on this topic. So as far as every aspect is there, when we are in the banking industry, we need to first look after the RBI circular. That is the first and most important thing. So from the RBI perspective, RBI has given the circular on September 18, 2019 on the concurrent audit system of the bank. So this is a base. Earlier the circular was 2015. Now later they have revised the circular in 2019. So this is the base circular as on date, which talks about the concurrent audit system in the banks, how the concurrent audit system in the bank should be. Okay, this circular is having some its and bits, so that is different story. So we have wrote to RBI also on some clarification, but let's not take into deep dive on. So in order to keep the thing simple, so this circular is our bread and butter for us, as far as the people in the industry and the people in the practice. So this circular is basically applicable to all scheduled commercial banks other than regional banks, and small finance bank, payment banks and local area banks. So these are the four types of this. They have to adhere to this circular as far as RBI is concerned. Now coverage, what this circular says. The circular is very well articulated, where the coverage of the circular says that the scope of the work of concurrent auditors, the coverage, business branches, etc. is left to the discretion of the head of internal audit. Earlier in scenario where the thing is that RBI has specified the thing. Now by this circular they have shifted everything on the head of the internal audit. So anything goes wrong, it will be the now head of internal audit responsibility. So now head of internal audit has to design his Concurrent audit system and the scope of the bank, which is as per the business models and all the things, considering all the business model. It is given to the head internal audit. He was aap dekh lo. So that is the thing. For this, internal audit has to do the risk sensitive areas identified by him and do the specific business model. Means every bank may be having some business model, like in a top bank, small finance bank, maybe different business model is there. So accordingly, some banks may be aggressive in gold loan, some bank might not be having the gold loan also. So depending upon the business model, so head internal audit on his team needs to design, do the risk analysis and identify the risk sensitive area depending upon the business volumes. Some bank may be not doing the home loan also, as on today, interestingly, and some bank is only surviving on a home loan. So that is the thing. So it is happening. So for some bank, home loan, zero risk. For some banks, it is a top risk. So like that. So depending upon the business model and risk sensitive areas identified by the team, they have to develop the internal concurrent audit system in the banks, and then whatever the areas, what are the scope is there, they need to put before the audit committee of the board for their approval. So this is the basic understanding. So now everything comes under the head of the internal audit. Now he has to then define the detailed scope, then what are the areas, what is the detailed scope, then checklist and all these formalities will come. Once we decide some areas to be audited, the checklist will come obviously. So then after doing this, he has to put before the entire concurrent audit plan before the audit committee of the board, say in the month of March. Boss, what is our plan, what is our schedule, what we are going to cover the areas and all these things before the audit committee of the board for their approval. He will be the recommending person, and then audit committee will give the go ahead. So on the basis of this, the internal concurrent audit plan will be formulated, and he will be responsible for this. Now in RBI circular, they have specified minimum areas to be covered under concurrent audit. Earlier they used to be given the comprehensive list, but now as per this, they have suggested that one should have the minimum areas. So this is the list, like they are saying that they have to cover the cash transactions, loans and advances, like physical verification of security, delegation of powers. These are all the credit related checklists which we are doing as of now also. And then adherence to the KYC and MLS guidelines, remittances and housekeeping like reconciliation, general ledger, all these. These are the minimum guidelines which RBI has suggested. But this is also not necessary, they have suggested, but in a larger sense you have to see that when you are formulating your business guidelines, your scoping and all this, so largely you people see that these minimum areas is covered, like treasury operation, non-fund based businesses, foreign exchange transaction, clearing transaction, verification of merchant banking business, verification of credit card, debit card, conduct of the employee. This is a new addition in this particular circular, where they are expecting us to cover expecting head internal audit or the team to cover on the conduct of employee mis-selling of the product also. So this is the interesting thing which people are facing the challenge on this, how to build around some system to have this point covered. Anyhow, but we need to cover when RBI says.
Is there any focus mainly on the asset side or the liability side?
All sides, sir, all sides. Nowadays, if you see, now it is covering all: cash, loans, KYC, remittances, housekeeping, treasury, foreign exchange, clearing, verification, all sides, sir. And these are the minimum areas. Again, the circular is very clear, where they have to say that a head of internal audit has to design the system as per the business model. Now, appointment of auditors. Regarding this appointment of auditor, what RBI says that one can have the team of in-house people also, or you can outsource also. Depend how the bank wants to go ahead with that. If the majority of the 99%, it is outsourced to the CA firms. So, but if somebody wants to have the internal people to have the concurrent audit, they can do this. That should not be so. But only thing is that RBI is very particular about the quality and skillful employee. Either way, you give it in-house or do it in-house, or you do it as the outsource model, but one has to be very careful on the quality and skill of employed in the for the concurrent audit. Maybe the CA, as of today, people are sending the articles and difficulty we face every day in this one. So, but this to address this point, actually, one has to be see on a ground reality also, because it's not like earlier days where the चलता है आर्टिकल आते थे टिक मार के चले जाते थे बट वी नेवर नो व्हाट टाइप ऑफ so but now with this circular one has to be very careful. So when we are giving the audit assignment to the particularly CA firms, basically the largest 99% we are doing outsource only. So we have to see the what type of the people are around us, what type of people is coming on our project, what are the people we are involved in the concurrent audit, that one has to be. So it is
so it could be a serious quality issue.
Quality issue. So, and the circular is very interestingly says, see, the head of internal audit in the bank should participate in selection of concurrent audits. This is the wording.
So this is a responsibility.
Yes.
If anything goes wrong, head of audit.
So now the thing is that by this wording and by every, if you can dotted line somebody reads it, so it is some like fixing the accountability. कि boss आप देख लो, आप हो, we are looking at you. And then you involve, and then you get it done. Then if something goes wrong, don't come to us. Because अपने हमको बताया नहीं, like that. So the head of internal audit in the bank should participate in the selection of concurrent auditors. And then of course, he will be recommending to the board of directors and in audit committee of the board. Then audit committee of the board is getting certified. Boss, chalo, theek hai. This is the remuneration, this is the PUM and this. So this is the, and not only this, the circular is very serious. Whenever we are giving the work to our internal people also, we need to have the staff accountability policy also. If something the people have not done correctly or carefully, manner which is to be done, then we need to have the staff accountability. So circular says that we need to have the policy to fix the staff accountability for the people who are doing the concurrent audit. So that is the wording they have used. So going ahead, in case of the bank has engaged in the own official as a concurrent auditor, they should experience, well-trained and sufficiently senior. The staff engaged in the concurrent audit must be independent of the branch business unit where the concurrent audit is covered. Means they should be independent. It's not like that they are working for the same branch and I am giving the same branch concurrent audit. It should not be. Now accountability. The external firms are appointed and any serious acts or omission, means any CA firm which is debarred, they should not be allowed to be on the board. So that is there. But the next line will be interesting. The bank should frame a policy for fixing the accountability in case of serious acts and omission or commission notice in the working of the bank's own staff or retired staff. Means if the bank using the internal staff for the concurrent audit, they should have the staff accountability, they should fix the accountability on that. But generally in the big banks, it is mostly 99% is outsource model. Hardly any banks is doing the concurrent audit internally. Now tenure and remuneration. Now this slide is quite important for all the CA which is in practice. Now earlier there is no restriction, aap 10 saal, 15 saal, you can continue as a concurrent auditor. But nowadays RBI is very specific, 5 years bus, that's all. After 5 years you will be in a cooling period for that bank. So maximum one can do the concurrent audit for 5 years on continuous basis. Then we will have cooling period as not categorically told. So we are giving 1 year and then afterward then that person can comes in. And the same second sub clause is that it should be not under unit for a more than 3 years. Means same in the bank maximum 5, but in a particular that branch or that unit or that process you will be in 3 years. After that process has to be given to the some other concurrent audit. So suppose somebody is doing the clearing audit, so he will be due for 3 years subject to review renewal every year, but after that he has to leave that area and then for the next 2 years he may be doing some other audit like credit audit, like any foreign trade finance, like this. So this is very important. Whenever you are doing this, only you will be getting the 5 years. After the 5 years, one will be having the cooling period, and for the particular process unit maximum 3 years. Then after that, one has to get it up, some other this one. And one more point is that in this, they have very specifically mentioned 70 years. Means max 70 years. The staff engaged in the concurrent audit may be capped at 70 years. Means अभी सब लोग तो retired bankers को लेके चला देते हैं पर basically credit audit. तो अभी वो 70 साल से ज़्यादा नहीं होना चाहिए. हाँ, may be capped, but generally nobody is taking a risk. RBI बोलता है.
RBI is may is must.
तो may भी बोला तो खत्म. तो like that. So.
Whenever it's mentioned as may, it shall be treated as shall.
Interesting. So, like this. And the same way, earlier, the thing is that remuneration and everything, nothing is so categorically mentioned. But with this circular, the remuneration, they have very categorically mentioned that head audit can recommend as what is the remuneration to the audit committee of the board. Then audit committee will give the thappa on this. It was approved. So in short, till this slide we came to know that it is a head internal audit, scoping is head internal audit, remuneration is head internal audit, tenure is restricted, staff accountability has been fixed, whatever it may be, then everything comes on the head audit and ACB. तो उनके पास ही है. तो जो भी है ACB में chairman, independent directors, head internal audit CA आ जाओ. So everything is there.
With this regulation, accountability has been completely changed and moved. So internal auditor is also now reporting to the internal auditor of head internal auditor.
Correct.
When did this regulation come?
No, 2019.
After the PNB scam? Before the PNB scam?
PNB के 6 महीने के बाद.
That make the big difference, right?
PNB and not only that, PNB and then our
of course, many others.
Cooperative bank.
Yeah. PMC.
Then review of effectiveness reporting system. So RBI is very categorically mentioned that ACB of the bank should review the effectiveness of the concurrent audit system. So as well as the performance of the concurrent auditor on annual basis. So review of effectiveness. What effectiveness means? Whether they are doing the qualitative work, quantitative work, what issues they are bringing in, whether the report has been submitted on the time, whether any problems is there, whether they are facing any challenges. So one has to have the annual review on the concurrent audit system that is to be placed before the audit committee of the board for their review or maybe the noting, we can say. Bank's internal audit department should develop a reporting system for the concurrent auditor. It's not like that one has given to the ACB annually एक बार कर लेते हैं. It's not like that. On day-to-day basis, bank internal auditor should do the reporting system. Reporting system means in the sense that whether who is coming, whether the attendance has been coming, whether the CA partner is involved, whether the supervisor, manager is coming, whether the review is done, whether it's not like that कि बॉस महीने में एक बार आएगा कुछ लिख के चला जाएगा. It's not like that. So internal audit system should have the reporting system where they need to have the day-to-day basis what the concurrent auditor, what they are doing, what is their work they are doing, what is the attendance, whether they coming regularly, not coming regularly, everything is tracked by the internal audit department. Quality review containing the important features brought out during the concurrent audits. So means what are the outcomes are there, what are the qualitative aspects one internal auditor concurrent audit was to be presented, they should place before the ACB. The zone-wise finding of the concurrent audit may be reported. Zone-wise is largely in the nationalized bank because they have the setup like this. But generally all private sector bank is on a centrally driven. So all the what are the outcome related with the concurrent audit, one has to be presented to the audit committee of the board on the quarterly basis. Generally in a large bank, what we are doing is we are presenting on monthly basis. What are the outcome from all the concurrent auditors? So we are presenting on the monthly basis also. So then the thing is that now the latest in this is that we used to take the executive summary to the audit committee of the board on the total number of concurrent audit issued during the month. But lately in some of the organization, in order to have the better corporate governance practices, now some of the banks has made compulsory that partner of that particular firm assignment is presenting the report summary to the audit committee of the board directly. So some of the banks have started that lately. and some of the banks has made the compulsory that the signing partner should be there in the audit committee of the board also, as a to present his report or this one. Depend that assignment is what type of assignment is, not like a branch or something like that, but maybe the some serious assignment like credit portfolio, maybe the treasury, some banks. So banks are started their practices also. So when fraudulent transactions are detected, they should immediately report to the head internal audit and chief vigilance officer. That has been categorically mentioned in the circular. If any concurrent auditor during his execution of the work, if he finds something suspicious or if he has some doubt that something is going wrong in the system or maybe what the transaction is auditing, he has every right to directly write to the head internal audit and chief vigilance officer of the bank that something I am doing this and I'm finding this one. So you can mention that. So that is the power given to the concurrent auditors. So this is all about this circular among these things. Other than this circular also there are some other circular where the RBI is saying that one has to have the concurrent audit. So one is this master direction. This is the most important circular in the banking industry actually. It talks about the KYC and ML procedures. So here also they have mentioned one area, a word, concurrent and internal audit system to verify the compliance with the KYC and ML policy. So the thing is that this is a largest bread and butter industry, bread and butter for a CA practicing industry where the KYC, account opening and all these sums we are getting covered through these circulars. फोटो है, आधार कार्ड दिया है, रेशन कार्ड है, सब ये सब का KYC के ऑडिट में अपने को पता चलता है. And then even the scope, volumes भी अच्छा है इसमें, मतलब a large number of the account openings are done nowadays, digital, non-digital, video KYC, lot of activities there in the area. So this is a very good area where the CF pattern, CA our members can, practicing members can involve to get the good remunerated job in this by this circular. Then RBI circular on the automation of income recognition and asset classification. So here what is that RBI in 2020 came with the circular where the all NPA in the bank, basically in scheduled commercial bank and small finance banks will be automated. Means what are the NPAs we are doing? Earlier used to do the manual exercise and all this, but in today's this one RBI says that it has to be automated. And almost all banks has done the automation. So what are the things by click of the button, by quarter end you will come to know all the NPA, what are the NPA has been done, what are the provisioning is done, what is the doubtful 1, 2, 3, everything. So RBI is very category said that this needs to be automated, and this is also as on today is a quite remunerative job for the CA industry, that whether the things are happening as RBI suggested. So in this from the larger perspective, the big the largest firm is making the money out of this to certifying that boss everything has been done as per the what RBI's expectation is that on automation part. However, there is a one they have added one line in this where the detail what they are saying that any manual intervention means sometimes agar in a particular account NPA classify हो गया but somehow particular party ने पैसा दिया था but कहीं तभी रह गया कोई करने का, then what we are doing in the normal practice उसको manually जाके reverse करते हैं कि बस ये NPA नहीं है उनको हमने निकाल दिया, system तो उसको कर देगा. If the money has not come, the system will automatically tag as a NPA. But we will find कि बस somehow this में पैसा आया था but it could not be accounted, that's why we are doing this. So wherever the manual intervention has been done by the bank, then this is subject to the concurrent audit. So concurrent audit will basically in the month will give the dump of that, whereas the manual intervention is there. Concurrent audit will go and check whether the manual intervention has been done is genuine, purposeful, whether it is as per the RBI guideline, and then he will give his report. So that is a area where we can have this one also in concurrent audit system also. RBI guideline और एक है जिसमें 2020 में आया है. This is called as the ad hoc and short review renewal of credit facility, where the RBI says that अभी whenever the party's review renewal is getting expired, so internally we are not getting the documents from the customer or maybe some procedural issues is there. So in order to extend his limit, so ad hoc basis पे उसको 2-3 महीने का दे देते हैं कि बहुत चलो ठीक है 3 महीने extend कर दिया subject to आप पेपर लाके देंगे करके, because in big banks large customer might be there are lot many papers we need to collect on every review renewal. So whenever anybody is giving the ad hoc or short renewal for ad hoc and short renewal is max is 6 months, उससे ज़्यादा नहीं दे सकते, but that is also subject to concurrent audit. Why it has been given, what is the problem, whether it has been properly authorized, delegation of power is there or not, everything comes under the concurrent audit. So here are the RBI says that further the process of governing the review renewal of credit facilities should be brought under the scope of concurrent audit, / internal audit. So generally banks prefer that we give it to the concurrent audit so that on the monthly basis these aspects will also getting covered, and then RBI on the is their risk-based supervision, they are covering this part also. Ki was how many ad hoc review renewal you people have given, whether it has been subject to the internal audit or concurrent audit. Then one more circle is there, it is the internal RBI instruction given to the all banks having a currency change. So what are the e-Kuber system, there is a monthly reporting is there on the withdrawal, transfer and all this. This should be certified by the chartered accountant or concurrent auditor. So this is applicable for all the banks we having the currency change. For every currency change, they are having the one reporting system which is to be reported in e-Kuber system, which is the portal established by the RBI for taking the reporting for various one. Now earlier this e-Kuber used to be for this currency and all this, and now this e-Kuber I think is in a wash development where the other things is also now started moving into that. So we restrict to the currency chest, where the currency chest daily currency check balance like total withdrawal, remittance etc. should be verified by the concurrent auditors of the bank on weekly basis. And they have a pre-designed format for this, and that pre-designed format concurrent will be certified and it will be uploaded into the e-Kuber system. So here also we are having some opportunities. Then one more RBI instruction has been come in 2019, where all the banks is having the internal account, which we'll call as a office account also. So what RBI suggested that ensure the proper is applicable to the all scheduled commercial bank, small finance bank, payment bank, and coverage is that ensure the proper control of the opening and operation on office accounts. Means what are the offices account open in the system of the banks? What is the purpose behind that? Who is authorized? What is the delegation of power? What type of transaction it is moving in and around of that office account? And whether the reconciliation has been done, tracking is done, purpose, long pending entries, what is the reversal, whether the NPA provisioning has been done on that, because more than 6 months in any long pending entry subject to the NPA provisioning. So all this has to be tracked. So this is also a very good area where some banks has do zonal wise, they have given the audit assignment to the concurrent audit to review all these office accounts, whether what type of transaction is coming, what is the reconciliation, whether it has been getting closed, whether it's automated, whether any undue entries has been, unethical entries has been moving through the account, might be possible in a branch level. So this is also an area, though it is not governed by the 2019 circular, but it is subject to the concurrent audit. So we need to give the bank needs to give the concurrent audit in the for these areas also. Now, depending upon the RBI supervision, that is their annual exercise, risk-based supervision, RBI may suggest the concurrent audit to the risk-based supervision also. Means they have the power. Suppose they found that in certain areas the bank's internal control is not up to the mark, or it is as per their expectation, they can direct the management also, okay, boss, you can have the concurrent audit in this area also. So some of these areas like validated transactions, sweep reconciliation, priority sector lending advances. So like these are the few areas depending upon the bank to bank. Sweep reconciliation they have made in 2018 they have made compulsory that sweep reconciliation should be check 100% after the Nirav Modi saga. So now sweep reconciliation is again coming under the compulsory part, and every bank is all the sweep related activity, either credit, debit, reconciliation, and everything comes under the concurrent audit. Validated transaction is again whether why validated transaction has been passed, whether the purpose, whether the funds were available, whether any adjustment is there, whether any unfair practice has been going on. So depending upon the validated transaction pass in the banking industry, they may suggest you need to have, because validated transaction is again a problem. That means something is not have to be done on that time, but it has not been done. So that is validated transaction. So RBI is very serious on this, so they may suggest priority sector lending also. One has to classify the agriculture, SME, MSME, then all these things. So RBI is finding out the very challenging role that bank is not doing properly, or maybe classification in order to take the classification advantage. Some maybe without the paper and all this stuff. Depending on the banks to bank may suggest that keep also whatever the advances which you classify as a priority sector, please get it verified by this. Then in priority sector bank, what the Concurrent are doing, they are checking whether MSME certificate is there, whether agriculture Satbara is there, whether the agriculture land is there, microfinance, whether the really is वो बंदे को microfinance के लिए पैसा दिए, whether it is really a microfinance और कहीं और जा रहा है पैसा. All stuff will come in the priority sector lending. Because entire guideline is 40% should be in under the priority sector as per RBI circular. Now one more area is coming as a International Financial Service Center. These are the GIFs. What is the GIFT City audits? Where the now GIFT City is coming under as a separate regulator, though it is governed under the body of this one RBI, but it is an independent regulator as on today. Earlier they were not active, but lately in last 2 years they are very active. Very active means very active. Day to day basis, like RBI, they are following with all the banks who is having a GIFT City branches. This is also independent. So they are seeking the compliance, governance, reconciliation, everything they want to be have the certification. So what are the branches in the GIFT City? They are under the this one Concurrent audit. Again, the area will be the same, like KYC, AML, credit, this one. So this is also one good opportunity where people can have more professional, we can use our professional services there. CDSL, NHDL, as you are aware of, all the DP operation is under the Concurrent audit by this circular. So this is where also we are taking a good amount of professional services providing. Now this area where the critical areas under the Concurrent audit in banking system generally is a main treasury operation where the remuneration is quite good, and then credit audit, wholesale banking, SME, retail, microfinance. This is basically lending parts. Then is the retail asset operation processes. Means retail asset operation processes is like something where the disbursement has been done properly, interest rate has been set properly, processing fees has been recorded properly, everything come under the retail asset operation processes. And now recently RBI has come out with the one circular where they have specifically mentioned that this circular is very important from the retail perspective, where the RBI says that all the documents which you have taken from the customer, maybe the mortgage for the property, RC, insurance, lien, hypothecation, everything should be reversed within 30 days after the loan closure. So this is also one of the important area, though it is not compulsory as on today, but it is an important area where our CA Concurrent audit, CA practicing Concurrent audit, or maybe the people in the industry can have the now significant role. Earlier it was open-ended, कस्टमर को 2-3 महीने तक कुछ नहीं मिलता था, वो बेचारा ये होता था. नहीं, अभी ऐसा नहीं है. अभी तो 30 डेज में देना है, नहीं तो 31 डेज के बाद 5,000 rupees penalty per day as the bank has to provide. So if anybody got the mortgage document after 30 days, he will get 5,000. Means bank has to provide the 5,000 rupees penalty per day for all cash. Means whether it is a hypothecation, lien marking, release of the charge. It's a big circular actually. And then definitely in order to have the control there, we will be involved somewhere, Concurrent auditor. Because we have to ensure that whether the internal control system is there or not. Priority sector lending, I already told. Trade finance activity like inward remittance, foreign remittance is in regulatory audit. Big volume retail liability branches, like some of the branches, if you can Mumbai, like Mumbai is a Nariman Point or maybe Fort area, they are the retail liabilities big branches where the volumes is where the footfall might not be that large, but the volume of the business is in crores, maybe 7,000 crore, 10,000 crore, 15,000 crore. So somebody, so RBI says one should have that branches in the Concurrent audit. Cash management system is also one area where the bank can have the Concurrent audit system. Like account opening, as I already told, AML and audit. AML audit is a big audit actually. Anti-money laundering is a big area in the bank actually. And they really means in order to cover, the word is small, AML means only three, I can say this word, but if somebody really want to take cover the entire bank, it's a huge area. One cannot say means cover in the, I cannot cover in half day seminar also this area, particularly this 3 point AML. And central processing activity is also clearing activity. Internal office account, I told you, gift city, I told you currency chest is the same. Swift reconciliation, validated depository operation. These are the tentative area. Generally, these cover 95% the audits in the banks. And then point for the robust implementation of the bank concurrent audit system means if somebody wants to have the concurrent audit, robust concurrent audit system in the bank, one can have the 5-7 points where one can be can definitely go and tell the RBI or maybe the corporate governance structure that we have the strong vision. One should be very updated with the regulatory guideline mandating areas like activities under the concurrent audit system, which we have seen lately. Then bank guideline, product program, policy and processes. In some banks, which what is in their internal program says that, internal policy says that this activity should be under concurrent audit. So they can specify in their policy, in the bank program, they can specify if its volume is large, we in order to have the more this one corporate governance practice, we should in the concurrent audit. So that area needs to be under the concurrent audit in our audit plan. Then banks may have separate concurrent policy. Bank may have separate concurrent policy in order to have the robust understanding and implementation part. Annual review of risk rating that we have already explained. Audit scoping, checklist, sampling. This means same. One can have the scope, they are defined, then checklist and sampling methodology. This can be demonstrated. Design the standard audit format. Somewhere in the RBI circular, they have a very categorically mentioned that one should have this design audit format. Means it's not like that ki West is using one format, South is using another issue. For the related activity, they are expecting that they should have the standard format. Then one can have the standard legal weighted employment letter, service level agreement that is internally legally weighted by the proper infrastructure support to the CA people like sitting arrangement, mails, laptops, everything. This is the as in the CA and the practice is facing the challenges for this area. Review of the draft report of the concurrent auditors means whatever the draft report is published, they have to be reviewed by the internal audit. Then they have to give the suggestions, any problems they have to do. Comprehensive tracker for report means whether the report has been come on time at the deadline, then the fees, 5 and 3 years limitation period, what are the software IDs is provided, what are the password provided, password will not become, but what are the software IDs will be provided to the concurrent auditors, what is their documentation, everything we have to review. Audit committee of the board. Audit committee of the board is coming, approval for empanelment, fees, scoping and quarterly reporting to the final outcome. These are the large area, almost 95%. If we are keeping the document in this format and fashions, we will be through with the RBI audits also. So these are in our short and lately the ICA publication, I found the manual of concurrent audit has been updated on October 2016 and guidance note is very helpful for the March 23. So this is the publication ICA publication. If I don't know October 2016, but Google says that only.
So needs to be updated.
So this needs to be updated.
And experts like you can do definitely a highly valuable contribution. So that's quite interesting. You noted.
So thank you from my side, and we are open for next 5 minutes for the question and answer.
Yeah, much more than 5 minutes. Now, Santosh Maller, looking at, he has outlined RBI expectations from banks, a role of internal audit at the highest level and responsibilities also. You have been doing a signing off statutory audit reports of large NBFCs, top 5, which are even larger than many of the banks. How you do this function of risk management, assurance, concurrent thing of NBFCs vis-a-vis banks?
Yeah, so I think first of all it's a good session.
NBFCs are already at par with banks.
Yeah. So I think it's a good session, very insightful. First of all, I mean, congratulations to Ramesh ji. So Manoj ji, your question basically, yes, as Yogesh said, there are upper layer, of course, that is, the revised list was out, I think, day before yesterday, upper layer NBFCs. So as far as the NBFCs go, more or less the regulations are as stringent now, especially for HFCs and the lending ones. Of course, the ones who do unsecured digital lending, they are not as the rigorous as that. But concurrent audit, so as a part of statute, and I think one of the slides did mention that if there's any manual intervention in the provisioning that is not flowing directly from the CBS, concurrent auditor and the statutory auditor has to look at it. So as far as the statutory auditor goes, one has to look into the internal audit system. Of course, as a part of CARO reporting, we have to look into the adequacy of the internal audit system of the company. Concurrent audit, after all, is sits within the internal audit system, because as he said, it's the head of internal audit who's the person who's accountable, and ultimately the audit committee. So the focus, of course, banks, because by nature they are vast, so there are branches and there are the hierarchy is much different. NBFCs, at least that I have seen, work a little differently, because of course banks, there's a larger longer history in a country, and there is a
so is there any concurrent audit? Is there any concurrent audit?
Yeah. So I think
formally?
Yes. So I think for NBFCs with asset size beyond, I think it's 10,000 crore, concurrent audit is mandatory. So and then so the KYC audit, etc. A lot of things do get outsourced these days. But nevertheless, in fact, today you had the news article where 2 NBFCs were fined by RBI for not doing the video KYC properly. So the name, the watermark was not proper. So I don't know, in a banking scenario, where does the concurrent auditor get wrapped on the knuckles, or he's like?
As far as the bank is concerned, that all the video KYC is under the 100% concurrent audit, and that is governed by that master directions, which I have put in that. That is the inter part of that master.
100%. 100%.
Sometimes is what happen in now almost everything is moving to the digital area. So RBI is very interested what you people are doing exactly digital. So that is a problem where RBI says that boss, one should have the 100% video KYC or to be audited by concurrent auditor. So
video KYC is where the risks are the highest, because many a times, in fact, one of our clients, there was this big fraud that got this thing, that the Aadhaar card. So while video KYC, the person has to be into that, and he has to display the Aadhaar card. And then you have to, as your record keeping, you have to strike it out, because it's a private, it's as per the privacy.
Masking.
So many a times you have to mask it. So many a times there are, in some of these, hinterlands, interior places, there are people who actually, have fraudulent Aadhaar cards, etc. And it's, it's a full-fledged racket, if I may say that. So that is where the risk is high, and RBI has, taken up to the fact that this is something which is very susceptible.
Fraudulent Aadhaar cards with intent to fraud. With intent to fraud, right?
Absolutely. Right. Sorry, I didn't.
Places like Jamtara are a problem for the nation only. So even means at top level, they are also thinking that what can be done. But
so NBFC, from the NBFC perspective, I can say, Manojji, see, basically for the NBFC perspective, there is not liabilities. Most of the NBFC is not having a liability. They are NBFC, non-deposit, taking this one. Hardly, I think, Bajaj is only there who is taking the deposits. Other than majority, the NBFC is a non-deposit taking. So from the RBI perspective, RBI is very particular on the thing where the deposit taking NBFCs are there. So,
but there are lots of NBFCs they don't take deposits which were known as FDs, but they have
CDs.
Borrowings from NCDs.
Bank
NCDs secured,
NCD.
and it's a large component. Piramal is large component of NCDs.
No, but that is different.
India
What
Bulls
he's
is
saying
large.
Public deposits.
Yeah.
Mahindra
FDs.
Finance,
FDs.
Mahindra Finance, for example, Bajaj.
So liabilities are there. It's the nature of liabilities changing because NBFCs want to diversify the sources of funds.
From the regulatory perspective, their regulations are more stringent as far as that NBFCs where they are directly taking the money from
Public.
Unsecured deposits. Unsecured.
Then from the NBFC perspective, where because I was there in NBFC from large, almost 10 years. So they are morely on the asset financing, the retail asset finance. So in the retail asset finance, we used to give the audit of the home loan, then sample basis car loans, then personal loan. These are the sample basis audit we used to do in the Concurrent audit. So their main criteria will be they will be going to have the KYC, documentation part, and then agreements, whether the proper agreement has been executed, whether the stamp duty is properly fixed, whether it is authenticated, whether it is signed properly. All this comes under the Concurrent audit as far as NBFCs are concerned.
Dr. Yogesh Shatpute, you have worn both the hats. On one side, you are today an operating banker who is cutting big deals today in treasury function, and you have had the hat of a risk manager, internal auditor, many things. How do you see now from the other perspective?
Both perspectives are totally different. So I can categorize the perspective as first being a risk controller and second being a risk taker. So it's everywhere in all organizations. Someone who is working in the business has to be a risk taker because he has to take a call, a calculated risk where he will be doing some credit to his organization's P&L. On the previous hat, what you're saying, it was more like a regulatory role where you can't bring in much of creativity because first line of defense is a business. So it's like more shifting from third line of defense to first line of defense. So defense has to be there. The only thing is that while working in the business, it's more like much faster or much prompter as compared to working in audit. Because if you miss it, probably audit is there to catch it hold. But still you can't afford to miss it. So the transition happening from third line of defense to first line of defense, still keep it as a defense. Bottom line is that you can't miss a circular or you can't just jump the border. You need to be aware about that up to what limit, up to what permissible framework I should operate. The only difference is the timing. That as the first line of defense, the timing is always first hand. You are the first controller of that risk. That's the major difference.
Good. In fact, for those of you who are seeing...
The third line of defense, I still say that's not less important. Or again, I'll just reiterate that it's not a late. Because the time cycle happens like that. It's like an automobile, what we can say manufacturing line, where everything gets assembled. So probably third line of defense has its own timing to catch hold things. It doesn't kind of preclude them, or it doesn't make them late also. But yes, first line and third line together are working for the safety of the organization only.
Some thoughts from this side?
So from a practicing CA perspective, so what are the eligibility criteria set out by normal for appointment as a concurrent auditor?
Generally, there is no specific regulation as per, but it is on the internal basis. So generally, as a big bank, prefer it should be a partnership firm, and then of course our internal ICA guideline is there that should be one partner should be a concurrent auditor pass out. So that way this is coming under the empowerment guidelines also. So generally, what we are preferring is that it should be a partnership firm. And then so the practicing chartered accountant should be 5 years minimum, and then they should have been done the similar kind of audits in some banks, nationalized bank, leading private sector bank. So depending upon that criteria, we are assigning the assignment. And then
every bank's criteria is there should be some bank audit. as per my experience, every bank wants कि किसी और का auditor experience लेके आओ तो तुम्हें यहाँ concurrent audit मिलेगा.
It's not depend. See, nowadays.
I know
No, it's largely correct, but it's not like that. You know, some banks is what you are finding is that now, to be very frank with you, I have seen some of my friends also who have left the industry and started their own firms. So we are giving the assignment to them because they have the subject knowledge. See, it depends. You should have you have the subject knowledge, then nobody can catch hold of you. Means, if I am in industry from 22 years and if I am taking the audit assignment of treasury credit, who will beat me? Unless and until I have the strong infrastructure, people management, all this, that again it will come. So it depends.
And you're meeting the RBI specific requirements, seniority and level of knowledge about that.
Then you are representing to the RBI auditors also. You are facing the day-to-day RBI auditors. Even I have demonstrated this to my RBI auditors also last 3 years. So I have not got any single audit query on my RA report, regulatory report. So they are very happy. It is a way how you are demonstrating to the regulators. It is not like that they are also, it's something like that they are always beating you or maybe fault finding. It's not like that. It all goes about how you are demonstrating them and how you are making them comfortable. Yes, we are very doing the great things and it's not like that it is something miss out. So depends. And in fact, this is on circulation, but myself is having the many doubts in that circular. So in fact, in one of the RBI audit, I have asked even my supervisor, audit RBI supervisor, sir, ये इसका कैसे कर सकते हैं? आप तो बोल दिए, but ठीक है देखते हैं. So then we have framed some question and then we have submitted to the RBI also. कि boss, if you can guide on these issues, so it will be helpful to remove the ambiguity in this one, because sometimes is what happened that their expectation something this we are doing this. It should not be there. Because as usual, we want to come at both the levels. So there might be something is even in KYC guidelines. So the circular is quite so vast. So if somebody started interpreting by letter and spirit, then it's difficult. Or implementation is difficult. So like that, we are questioning many things. Even sometime in a trenches, RBI in KYC guidelines, some other thing they have mentioned. You have to report to me any minor or major irregularities. If minor बोला तो एक छोटा किसी ने रबर स्टैम्प नहीं मारा, माइनर है, बट वो फिर देना है क्या? वो देगा तो पूरा 10,000 लाइन आइटम आ जाता है. भाई मैं देता हूँ, आपका सर्कुलर बोला है माइनर, तो मेरे हिसाब से माइनर मेजर बोला तो कुछ भी आ गया. वे समझे मेरा कोई ऑफिसर ने इनिशियल नहीं किया, भूल गया, माइनर है, बट आपका तो माइनर है, मुझे तो देना है. उन्होंने नहीं किया ना, उनके सर्कुलर में दोनों लिखा है माइनर मेजर, तो मैं क्या करूँ? So like that means these problems will be always be there. Then again when you give the submission, then they will say कि boss ठीक है ये line items हटा दो, ये दे दो, नहीं दे दो. Like that it will come again. So there will be a challenges. But only thing is that how you are making them comfort with their supervision, and then how you are demonstrating on their basis, how you have the control. इसने अभी Concurrent audit का थप्पा लाके उसको रिपोर्ट दे दिया, वो उतना ये नहीं है. अभी nowadays if you see lately I have attended RBI audits for this bank. ठीक है आपने दे दिया, थप्पा दे दिया. उसने क्या किया, सीधा फ़ोन बोला उसका कौन है वो पार्टनर, तो बोला ये है, बोला उसका मोबाइल नंबर दे दे. इसने सीधा मोबाइल में अगर उसको फ़ोन किया, बोला कल मिलने के लिए आ जा. उसको बुलाया. Nowadays doing that only.
But that's a usual thing.
No, but नहीं है. Lastly, see, I'm in banking industry वाले. ये lastly 3 साल 2 साल से 3 साल से प्रैक्टिस चल. Earlier इतना Concurrent audit को कभी ऐसा डायरेक्टली बुलाते नहीं थे. हेड इंटरनल ऑडिट से पूछते थे, बट डायरेक्टली उससे 1-to-1 मीटिंग तो मैंने देखा नहीं था. लेटली चालू किया है वो, पहले कभी नहीं था इतना. अभी ये तो Concurrent audit को बुलाया. अभी now in some this one inspection जो ऑडिटर ने ऑडिट किया है ना, इवन इंटरनल ऑडिट पर से, तो उसको भी बुलाते हैं. बोले तू डेमोन्स्ट्रेट कर यार, तू कैसे ऑडिट किया.
गुड, वेरी गुड. सो ऑन द ग्राउंड थिंग्स आर हैपनिंग.
सो हेड ऑडिट को छोड़ दे. नहीं, स्टैट्यूटरी तो ठीक है, थोड़ा बहुत रहता है, घर का ही रहता है या जो भी है थोड़ा बहुत ये, बट ये रेगुलेटर बोला तो थोड़ा बहुत टेंशन रहता है. नहीं, नॉट ऑन द लाइटर साइड, क्योंकि 3 साल 2 साल 3 साल तो हम इंटरेक्ट करते ही रहते, तो बोलते अरे यार बैठो करो थोड़ा हो जाएगा. बट फ्रॉम रेगुलेटरी पर्सपेक्टिव तो इन लोग इंटरनल ऑडिट तो इवन दे आर नॉट कीपिंग द हेड ऑडिट ऑल्सो असाइड, डायरेक्टली आस्किंग दैट ब्यूरो कि वस्तु कैसे ऑडिट किया डेमोन्स्ट्रेट कर.
So definitely a very strong need to update a manual on concurrent internal audit.
But my
Post 2016, right? Huh?
My question is that when we have reported on major and minor irregularities, pitfalls, then what remains to be asked to you by the RBI?
No, see, because they have their limitations, sir. If some big banks, if you say minor, the record will be huge. Whether they have that capacity to.
Yes, manually not possible.
Manually not possible. Thus, ultimately they will come to our head. This one also. Boss, please explain us.
Okay.
The risk for them is that if there's a failure tomorrow of the bank or the NBFC, somehow within the RBI hierarchy, they are also held responsible. Because आपने 2 बार ये inspect किया, despite of that, this is so you didn't catch that. So that accountability they have.
Okay, so to arrive at a suitable comfort level.
Yes.
No. See, the difference is that when the RBI circulars say आपको देना है, that is the thing. बाद में क्या करते हैं, कैसे करें, depending on auditor to auditor.
Are they using artificial intelligence?
Yes.
They who? RBI.
उससे अच्छा भी RTI.
RBI is using statistical intelligence, and they have set up a separate unit whereby they are mining, analyzing the data, and throwing for asking questions wherever they find a huge variance and deviations as compared to the previous trends and all. So a lot of analysis is happening at RBI.
What are the target areas like, say, NBFCs, banks? Then there will be so many others.
So
Asset size.
The goalpost keeps shifting, but the way they are identifying is from wherever they find a major risk or threat to a systematic risk from a money supply chain or to the market as such, broader market as such. That's their identified area. So if you see, while I'll cover it, for NBFC, the way they have done it from a scale-based regulation, they want to bucket the NBFCs into various buckets where they can apply their supervisory tools, techniques specifically for respective NBFCs, respective size or scale of NBFCs. So they are applying it from that.
So for example, when there was this Silicon Valley Bank disaster, I think about 1 year back, they started focusing on liquidity. So they sought for a lot of information about liquidity, LCR, etc. from banks and NBFCs. So as he rightly said, it's situational. What is the concern and what?
No, every bank is now asked to give all the trial balance and this one night. The RBI.
So I missed that part. What did you
Most
say?
important part. Every day, daily update.
Daily update. We have to give the daily update. We have to give the trial balance to the RBI.
So real-time update.
Real-time update.
So you created a funnel only, right?
Yeah.
You get this data automatically.
Yeah. And then on the basis of this, if they found if any major variance, what is their risk parameters, next day morning में mail आ जाता है कि ये क्या है.
आता है. And that comes to head of internal audit.
उधर
CFO.
maybe उसका chief
or CRO. It should be CRO.
So
Probably CRO, right?
So now
whosoever they have been interacting it, either they get it
Chief
from the
Risk
CFO
Officer.
or the compliance officer, either of them. So I receive mails and messages or my compliance guy.
where RBI return automatically file हो income tax return RBI file होता है ना automatically, ऐसा उन लोग भी करेंगे कि बस will not come to this one thing. आप हमने पूरा एनालाइज कर लिया अभी डिजिटली, आप हमको आके बताओ ये क्या है, तो हमारा ऑडिट करता है.
Tax is concerned, they are miles away from it yet.
नहीं but इनके पास भी है ना. See nowadays they are also working on the AML and even we cannot believe sir, आज के डेट में ना उन लोग फिनाकल का लॉगिन पासवर्ड लेके बैठते हैं डायरेक्टली सिस्टम का एक्सेस. बोले आप भाजूटो मैं देखता हूँ मुझे क्या देखना है.
Good.
उससे ज्यादा क्या करेगा.
Some thoughts from you.
Sharma, just
Observations, thoughts,
RBI, they
issues.
just appointed McKinsey and Accenture for the AI, so they're getting too much deeper into it. It's a 100 crore project.
100 crore project.
They've hired these two agencies.
What are the timelines?
Timelines नहीं, but they have invested.
100 crores. Good. It's all coming from taxpayers' money. So a lot of AI-based things will come out.
Supervision, lot of things.
Today RBI is directly taking Finacle login and they are seeing what they want to see. उससे ज़्यादा क्या audit हो सकता है?
That is natural intelligence.
Natural, बस खत्म.
That is natural intelligence.
बस.
And McKinsey will help in
And now what they have done है,
artificial intelligence.
they have developed their own SQLs also. हम लोग का सर्वर का एक्सेस ले लेते हैं डेटाबेस का, वो आके SQL मारते हैं, जो ऑडिट क्वेरी डेटा वीटा चाहिए वो खुद ही लेते हैं, हम पे डिपेंडेंसी नहीं है. उससे ज़्यादा क्या है, उससे इट इज एंड सर. और फिर एक बार SQL जनरेट आप कर ले तो आपको चाहिए उतना डेटा मिल सकता है. ओनली यू नीड टू राइट द स्ट्रक्चर क्वेरी, बस एक बार मार लिया बस आगे रिपोर्ट्स आ गई.
Great, excellent deep dive in the first session itself. Very comprehensive. And with so many people adding value. Now, Sunil, in your own way, acknowledge and welcome Gagan.
Hello, sir.
Then I'll add. He'll also share, but first in your own way.
So, welcome to the Gagan Kothari. He happens to be CFO of JF Financial, which is I will say, if you are basing the
We have interacted.
No, he remembers very well. He remembers very well. That's why he has been chosen. I will add something now. Like Dr. Yogesh Satpute wearing multiple hats. We just mentioned two. There are many more. PhD, Doctor, CA, ICAEW, and many more. Also has done a lot of international conferences and a pillar of BFSI CM Roundtable. Works quietly, a very strong pillar. Now, Gagan, besides being a CFO of JM Credit Solutions, he has been wearing a lot of hats, and I'll take a liberty to say very strong pillar and founding team member at Concurrent of BFSI CM Roundtables.
Yes.
He works so hard. Without him, in fact, he made a foundation very strong. On the first day, how many members you need? What level of members you need? 1, 2, 5, 10. I'll get it. And he delivered. That's how it happened. We often share sometimes how the BFSI CM Roundtable think tank started. Concurrent over a decade ago, right? First 3 events in the Loda Auditorium. Then boardroom style. It was all conceived at that point of time to have boardroom style meetings and have members who are all speakers. CFO, perspective. At that time, I think you were a controller or a AVP. Now you are a CFO. There are several CFOs here. Valerian, CFO, media company. Low profile, but they know their work very well. Suyash, CFO of a 1,000 crore plus reality play. So Satnam Singh, CFO of a retail. Yes, ex-CFO. And many more. Now today, Navratan, he shared about Concurrent audit. Now wearing the hat of a global virtual CFO with office in Dubai. So really, and all speakers here, all 100% actually, 100% become at least 80% are top level speakers and panel of experts who add value. So that is it. And today, yes, Gagan wearing a different hat, CFO series, thanks to Anupam. Anupam did a few calls to several CFOs. Award-winning CFOs, future award-winning CFOs also, and each of them agreed immediately. 1, 2, 3. Shoyas that did a session on reality perspectives. We had a CFO of Tata Investment joining last time, and we have Rajiv, and many are CXOs, part of Tata's. So there are deep dive, and now it came. The regulator has working on the hats the CFOs are wearing, and they have more expectations, particularly in respect of fraud. You are responsible. I don't know to what extent. they are responsible, they can share, and there are lots of expectations from stakeholders also. So part of the this series, and yes, Sunil has been a partner of a top firm, and it happened very, very well. I remember Gagan asked Anupam, who is on the panel, So the team of such a wonderful, powerful panel, and yes, so you are wearing all the hats, and it's your thing. And after that, Santosh should add some value. We always have an open forum right from the beginning, and we'll cover the latest developments. Santosh, on the latest circular recently which came on valuations. Anil, Sunil, Naresh, latest updates on what's happening. And so we have a high quality takeaway as usual. And Gagan, it is your roundtable conference series. You do as much as you want today, and balance you can always do in future scheduling whenever you want and when the market demands. Simple.
Perfect. Thank you, Manoj. First of all, Manoj has not changed. I'm meeting him after a very long time, but the way Manoj introduces someone, person feels so overwhelmed, and so am I feeling. So by the way, let me tell you, I had called Anupam yesterday night saying, boss, I've been having the travel plans, I've not done anything. 9 o'clock, 9:30 in the night, let me skip it or something. Anupam said, no, you have, please do it, and let's do it. I send you something presentation at the last minute. We have some pointers, but I would have more to talk. Okay, we would have some pointers, but I would have more to talk, and whatever I'll try to share, I'll share from my personal experience of post interaction with auditors, regulators, internal management, and consultants. So they have been my face in terms of interaction, and basis this, whatever things have evolved from an NBFC perspective, what we have seen, and I'll try to bring that on table. Feel free to ask continuously, not in the end as a Q&A session, but routine from point by point. I should press page down. Perfect. Thank you. Bear with me. Important point here is NBFC has been regulated by RBI, but the way the risk has been evolving within NBFCs, RBI has split this, has brought some scale-based regulation herein, which has been applicable from October 22 onwards, but that has been brought in with an intent to supervise and have an oversight on the respective NBFCs, and they have broadly bucketed them currently into 3 different buckets: upper layer, middle layer, and base layer. And with upper layer being more systematically prone, or they can have a systematic impact on the market, they would have a larger oversight. By and large, let me tell you, the way I interact with the regulator, I have seen that RBI and the way they were seeing NBFCs and bank, pre-base formation of NBFC they had some regulatory arbitrage as compared to banks in their operations, sale, risk, reporting, everything. I believe that arbitrage has been narrowing down more and more, and the best person to understand this is, I believe, Mr. Deepak Parekh himself, when he decided to convert HDFC Limited, merge with HDFC Bank, HDFC Limited Bank. So that arbitrage is narrowing down more and more. However, new products, the way tech-based financing, peer-to-peer financing, those would still emerge in NBFC, because them to get adopted in the banking framework is very, very difficult, or maybe being non-compliant at a start. So my point is, RBI, when they come and look at NBFCs, they try and come with a banking mindset. Even though those things are there as a part of regulation or otherwise, but the way they question you, the way they try to understand the entire framework, the way NBFCs are operating, they look at from a banking mindset. The way I'm seeing things moving forward is, I'm seeing this would narrow much further. All NBFCs should ideally be prepared and observe the banking regulation and try to have those things within their own framework. In the way NBFCs are operating, they tried to have a framework of banks, because that's going to come sooner or later, at least for large scale, mid scale NBFCs. I'm seeing it coming it very, very soon. Thank you. I'm not going to have it. Another point here is when RBI comes, okay, for understanding the data and the way RBI works, okay, RBI has also evolved dramatically. I have seen and observed RBI team coming from 10 years ago and the RBI team coming now. They have completely evolved. They have more and more understanding to do tick the box checking, and I heard Ramesh completely. They have such a fine understanding of things. They are not here to pinpoint. I really like these interacting with RBI. They are not here to pinpoint. They are also here to help. They are also here to strengthen your own NBFC's framework. So my interaction with RBI has been, they have been pushing the NBFCs. Yes, please implement this. These are the areas. Implement, do this, do that. They are not putting as a remark, but they are trying to make an understanding, awareness among NBFCs as well. How could you do it better, or how could you put a framework which is far, far better? They have multiple frameworks in mind. We discussed a lot about AML and KYC. It may be quite small, but I have certain experience which I would like to share from AML and KYC perspective. It's not the way has been conducted currently with NBFCs, the way they are managing it. And especially having seen some of the international standard KYCs, they actually want to see the source of fund, flow of fund. It's not about Aadhaar, PAN card, passport, or including video calls. So for NBFCs, it has not been much of a threat so far, especially those NBFCs which have been operating at a wholesale level NBFCs. Okay. I represent more from a wholesale NBFC, so I can speak more about it. It's not more of a threat because most of the clients are corporates. So their KYC is way, way different, but more to understand is the source of fund, the way the funds are flowing from one entity to another, and the way related parties transactions are being, the severity of related party. Are we as an NBFC also conduit to their transaction? Because there have been certain transactions where RBI has been asking just for a way to understand, are we a conduit to these transactions, or just otherwise it just happened for the sake of happening? So keeping yourself away or identifying the problem from being a conduit for certain transaction is relevant and important to stay away from it. And those identification whereby we have seen certain advisors helping us out to devising some has been really, really critical. Another is more importantly from a liquidity risk management. See, this has evolved in a very different way. We have seen some LCR, we would have heard some LCR coming in action since the last 3 years, okay, from 2020 onwards or so. Like CRR maintenance, RBI has also asked NBFC to maintain and do some stress testing on coming 1 month outflows. 30 days, coming 30 days outflow. So for this, RBI has started with some small threshold, maintain 50%, 75%. So by next year, they would get 100%, 85, 100%, so 85, 100%. So those has been relevant, and my point is for a chartered accountant to understand these nuances, the reliability on the inflows to be considered. For an NBFC who's operating, the most of the reliance has to be placed on the predictability of inflows. Maybe I do have contractual inflows coming in, but devising a tool based on the behavioral pattern, based on what is actually going to come and hit you, what is the actual outflows based on not more on contract but more on the behavior. These have been the pattern. So I'm saying CFO more from regulatory is also going to becoming more and more towards analytical and applying all those analysis in all aspects. This looks to be very, very small thing, liquidity, not a big deal, right? Inflow, outflow, negative mismatches to manage karna. It's really not that. The way we are saying,
NBFC doing retail might have a good diversified population, but NBFC doing wholesale probably could have very less number of flows to manage, and then it certainly will impact the behavior also.
110%.
Because a small NBFC having say 50,000 accounts, you can say 40% behavioral and you can still.
Like, beautiful example, when you say retail, all HFCs, they give loans in the range of 15 to 20 years to an individual. You'll be surprised, as a behavioral pattern, it's 7 to 8 years when people repay the loan.
Wholesale NBFC might have 50 or 100 accounts which are, or 100 deals which are live in system. Probably that would be little difficult. One deal and it will impact 10% of the.
Absolutely.
Liquidity is majorly, I can quote this way. NBFC is having a microfinance license. That is called, we are calling it NBFC microfinance. So this particular industry is in microfinance. जब ट्रेंड आ गया तो माइक्रो फाइनेंस में तो सब 1 लाख के नीचे वाले लोन रहते हैं, तो कुछ पैसा आया नहीं. ऑलमोस्ट 90% लिक्विडिटी खत्म हो गई. फॉर दिस, फॉर दैट टाइप ऑफ NBFC, liquidity is a major risk because they are the small earner people, less than 1 lakh वाले हैं सब. उनका ब्रेड बटर का ही बंद हो गया तो पैसा कहाँ से भरेंगे? So for that category NBFC, like a NBFC microfinance, NBFC having a 6-7 type, in that category it was a major risk. So sorry.
No, thank you. Liquidity is a wide topic and we can cover as much as possible.
NBFC
but
liquidity and behavior, that is a.
You'll have tea, no?
I'll have tea. In terms of devising liquidity, I'm trying to cover something apart from regulation, but trying to make you understand both from suppose inflows and outflows, which an NBFC, from an outflow perspective, it's not only the debt repayments and the obligation which they have to meet, but also any disbursement or new disbursements. Especially what we heard is from Yogesh, you mentioned about those wholesale. It's not contingent about the on the due diligence which has to be done prior to lending. And it's not time bound. Earlier it used to be time bound. Yes, we have to meet some year end, month and quarter end those target, but regulators have become so stringent that in case it has been mentioned or as a part of the sanction, those CPs have to be done, come what may happen, and it has been taking time off. All have been cautious enough. Okay, these accountability and responsibility is being held on the various hats. Okay. Various heads. People have become more and more conservative in giving a simple sign off that it's good to go. So people are more and more conservative, and it's good for everyone. No one needs to match the time and so on. Liquidity. Another topic I would like to cover is adequate maintenance of liquidity. Liquidity is for capital protection, and managing liquidity is really critical. And assuming liquidity, excess liquidity creates only a negative carry on the balance sheet, it's not true completely. It really distinguishes the people who think of living another day, another month, another year. Okay, it's more of a survival, because what hits you at what point in time. We just heard about the Silicon Valley scenario, and whereby RBI was actively asking data about liquidity in the market. Liquidity gets impacted so suddenly. Okay, daily regular market updates makes a huge difference in the liquidity. Currently, if the capital market is booming and lots of IPOs are coming, liquidity is sucked out of the market to support the capital market financing or these investors who want to participate or take those high risks. So these all events impact NBFCs. These all events cannot be factored. Okay, while you design your liquidity for longer period, maybe even for a year, these factors have to be factored in as an abundant caution, not out of. You don't have any regulation gauging any of these.
What is the negative carry actually currently in the current today's market? Huh?
So it depends. Negative carry broadly is
how many
cost
basis
of
points?
Your borrowing
Yeah.
minus, at least for me, I see what is liquid mutual fund offering. So liquid mutual funds are offering in the range of 6.5% to 7%. So whatever your cost of borrowing is, assuming 9, 10, 9.5 minus your.
So 2.5% at least.
Effectively, for me, I assume it's around 2% for my calculations and all. It ranges.
And what is the kind of impact on the P&L? Ultimately, that matters, no?
See, honestly, it doesn't matter. So this is very surprising thing. It doesn't matter a lot, because the confidence at which you in turn tend to borrow is different. Are you a desperate borrower? Because if you would not have maintained adequate liquidity, at times you may end up doing a desperate borrowing, which may otherwise also impact. So, as a larger picture, it doesn't impact you much. It strengthens your balance sheet. So, it's more of a capital protection. Liquidity is a capital protection, which is the point I'm trying to make. Abundance is a thought. I mean, is your own calculation how much to be maintained or otherwise. But
Rating goes up.
rating goes up.
Yeah.
The agency, the stakeholders get such confidence on the balance sheet. That's really good.
What is a minimum and maximum ticket size you are doing at your NBFC currently?
So we are a wholesale NBFC.
Yeah.
Our minimum ticket size is in the range of around 50 to 75 crore.
50 to 75 crores.
Yeah.
Okay, maximum?
And maximum we have gone to 1,000 crores.
1,000 crores per client.
Perfect.
And total size of the asset base?
For particular NBFC, currently it's around 10,000, but from a group perspective, it would be around 20,000.
So this JM Credit Solution is 10,000, where you are the CFO.
Yeah.
And you said 1,000 crores to 50 to 75 crores.
So,
1,000.
When I mentioned 1,000, I really meant is 1,100 crore from a group, but from a legal entity, we have done 800-900 crore.
8-9 to a single corporate.
To a single.
Okay.
And
That puts
average interest rate, average interest which you are charging.
So it's based on the risk assessment, but the average yield on the portfolio is on the range of around 13 and a half. But it's more dependent on the particular client risk assessment, their underlying asset, their past behavior.
all secured lending.
Completely secured lending. We do not do unsecured lending.
In wholesale, it's generally secured. Wholesale cannot be on unsecured.
No. So we started this business in November 2000.
No, actually, secured means depends on what type of security. There are securities which you don't realize for 10 years.
Real estate financing.
Slash is the safest business.
Because of the concentration?
Because you have a margin call. The moment it declines, you have to.
So Gagan, security wise, what do you have? One is this land and buildings, which is illiquid. Other is we are talking about LAS, often promoter funding, which is often if they are listed shares, they are liquid. Unlisted shares like Baiju, they take a lot of time, or the new age companies. So what is the type of security generally, and what is the experiences with that?
I'll tell you. So experiences on security is, so we have been doing two types of loan, both the real estate and non-real estate. So when I'll first go to non-real estate, the LAS, under LAS there are again two buckets, listed and unlisted. And unlisted would be a concern for anyone, like you mentioned about Baiju's. So we try to do transaction where we have visibility, where the money is going to come from. We try to think from a bridge financing perspective, whether these guys are going to raise capital, the money is going to come in some different form, where the money is going to come from. Over there, even in case of unlisted, the collateral cover is really high as compared to listed. From a listed perspective, the minimum requirement of RBI is 2-time cover. For every 100 rupee borrow, you need to have 200 rupee collateral cover. It's not same at all. We try to have more than 3 times cover in unlisted. Because you never know, event like Baiju's or anything happens, we try to do something where we have visibility in terms of flows coming in. So thinking from bridge financing, or if the pedigree is real high, it's backed by great people. To answer you, that's from unlisted. Listed, anywhere around 2 times being minimum, but anywhere around 2.5 to 3 gives a great deal of comfort. But having said this, we have also gone through that Adani, the way Adani situations had happened, even for holding some shares. But we were lucky enough, upon call, they used to top up the listed share, had to force sell, or there no such.
Good, so no bad experience with them.
But in any case, it was a prominent name, but we do face some cases where we had, in case the security has not been topped up. So there have been methodology which has been predefined or pre-agreed even with the borrower, that there would be a top-up call in certain days. They need to fill in top of the accelerated payment, and so on and so forth. So if they do not abide by it, you are forced to sell down.
So I guess in your case of the last where unlisted security, there also real estate?
No. Those aren't. When it's real estate, it's pure real estate. So, luckily, now from regulatory perspective, from last year, October 22, RBI has directed not to do financing against land or project which do not have approvals. So those early stage financing or land financing is out of books. So those people who have faced trouble, because real estate is a very opaque market whereby approval process involves
That entire segment has moved to private credit now.
completely private. But they're asked, see these
Private credits are doing this.
their AIF's ask is around about 20%, but it's going to hit hard when the time comes, and the time is going to come now 5 years from now. So
Because approvals are more like a politically impacted and all. So that's why private credits are taking call on that. They tag it as a performing credit.
they don't have to tag anything as NPA, right? They do not require any such NPA classification. So beautifully, you brought a point. In case of real estate financing or any kind of wholesale financing, either done by NBFCs or done by AIFs, the beauty is NBFC has to recognize NPA based on DP. Okay, if it's 90-day past due, it's an NPA in their books, but it's not the case for AIF. AIF, it's
But that's if NBFC is giving a loan. But structured finance also? You are allowed to do structured finance.
We do pure
Loans. Okay. No structured
interest in
deals.
having any equity upside, because the equity upside never comes. Pure plain vanilla loans, and that's
No, but without having an equity upside, structured finance, you can easily give 18-20% in a certain way, depending on cash flows you want
it all depends on
to
the
meet the
risk.
client's cash flows.
Risk appetite, and from a risk appetite perspective, the way we have designed our framework, it's more to do plain loans.
So you take the full risk of delay on NPA side in that case. It's very clear. You can't do any manipulation.
Can't do. You have to run by this DPD. No choice.
Yeah, no choice. So what is your now current gross NPA and net NPA?
So NNPA is close to around 3.5.
Gross.
In NNPA.
And gross?
Gross would be around 5.5, 6.
Okay.
Real estate covers both residential and commercial, but the focus has been more towards residential. The way we have seen and the way the market is behaving for the residential and the need for residential, especially post-COVID, has been a much safer trades.
And experience on this recoveries and foreclosures and sales?
Pathetic. So you brought it up.
See, on residential front, the borrowers are like us, more like a monthly earner. So probably the sort of NPA goes down as compared to.
It's safer, yeah.
It's still
So it's not completely like that. So as an individual borrower, we fall with banks or NHB,
finally the home
HFCs.
buyer will always be an individual.
Yeah, but
It gets diversified.
you know what? It's an ultimate buyer. Okay, home buyers are the ultimate where the source of money is going to come from. But we tend to forget the real estate project completion has so many nuances and approvals required. It's not only the base approval to set up the plinth and the CC. Right up till completion, there are many nuances and there are many stakeholders. Maybe the stakeholders, external stakeholders are many. And who can create possibly the nuisance.
So any experience of fraud in some of the sectors like real estate
so
or
let
anything?
Me now take you.
No, we'll then connect with the role of CFO also.
Enforceability. Now let me take you from an enforceability perspective, fraud perspective, the way the frauds happen, and give you some flavor of it. In terms of enforceability perspective, the enforceability of a real estate is way difficult as compared to securities. Securities, you can just dump it, sell it in the market and recover your money. You can identify a loss as a loss upon sale, potential if any. But in case of real estate, people try to take advantage because it's not easily marketable or cannot be monetized on day 1, day 2. And if it's a developer, they can take all the advantage of the rules, regulation, laws to put it under dispute and litigation.
Their network.
Their network. So those litigation actually is a problem. Okay. In India, I've seen and I've compared it more with the Singapore laws, land laws, and all. Enforceability is the biggest challenge, and that's why real estate lending in Indian NBFC market commands higher rate because it's a risk. Enforceability is not there in order from an Indian judiciary perspective, irrespective whether we have IBCs or otherwise in CLT, it's not in place today. Enforceability is concern, and whereas it's not the case in case of loan against shares, so they carry a very very different risk.
So in case of this, how a CFO or how somebody decides that something loan shall be sold down, sold to ARC or something like that?
So I see the CFO of a realty company.
Yeah.
In fact, he has cut a deal. In fact, it was reported in the media. ARC deal, right? Yes.
So, from a CFO's role perspective, I'll tell you, try and identify the LGD, loss given default. Okay. Apply the probabilities, and never forget a very simple funda of time value of money. I think this time value of money we always forget. We are so possessive of our assets. I'm just saying, from a developer, he believes there's a 100 crore asset, it is a 100 crore asset. But this 100 crore, if it's realizable 3 years down the line or 5 years down the line, it's different, right? So my simple theory is we should never forget the time value of money. That's a simple concept, but we always forget. We get obsessed with a larger number and forget the time value of money. So at all times, I factor this time value of money to identify whether we should hold, sell, or act otherwise, because from all these actions are dependent on two things: ability to absorb. Okay, so if there is a profitability and if there is an adequate capital on the books, from a CFO perspective, that's a decision which he pushes for. If there's an ability from a balance sheet perspective and from profitability perspective, and they can absorb such a loss in case of a downselling, because if you have to sell down a bad asset, it requires a hit to be taken in the profitability, right? So if that's a possibility, you do it. Plus, they also have to take care, which is there in few slides, but we just jumped it, the covenants to be taken care of. Are we hitting any covenants, or it's otherwise whatever we have promised to our rating agencies, to our lenders? So those are the factors which CFO thinks while making this decision. And when it comes to ARC or any other prospective buyer, again, many of these ARC do not offer a cash deal. They offer a SR deal, participation deal. So again, the same concept from time value. It will come when it comes. Okay, you're at mercy of again a third party to recover your own money. Biggest thing is identifying a problem as a problem, accepting it. So from an acceptance part, it all depends how much the balance sheet can absorb at a given point, but acceptance is the most difficult part. Identification still happens because of the IND-AS and the regulatory RBI framework, but acceptance is not easy.
And develop psychology, being possessive about the project.
Being possessive. It's convincing, right? So I have observed, and this is again practical experience since last 4 to 5 years. There are two types of borrower. A type of borrower who is ready to cooperate, who's ready to come out of his problem, who has identified a problem as a problem, and who wants to come out of a problem, because these developers, or I should not only say developers, these borrowers who wants to live a larger life, okay, want to take this as a problem and move ahead in life, I find them beautifully. Even if they are NP, I don't mind working along with them, because they know they want to cut their losses and move forward in life. But there are certain borrowers who are real pain point, who do not want to accept this as a pain point, as a problem, and they become in turn our own problem for the entire economic eco-circle.
What is the ratio of NBFC exposure to reality?
You asked a tough question, but this ratio of real estate exposure of NBFCs has coming off. Okay, and to answer you from a perspective, right from 2018 onwards, when the credit crunch started, okay, in the market, There are many NBFCs that either slowed down or have closed down these businesses, right? Starting from Altico onwards to there would be many competitions. I don't want to name any of them. So many have scaled down their businesses. So as Yogesh really pointed out, these reality business have now moved to AIF. Okay, so those AIF is our potential benefit where we can structure the transaction, shape a transaction, and it's a win-win for all. But point here is the intent of the developer, or if really the intent is good, if the developer really gets stuck because of approval nuisance or any other nuances. So that's important. So, sir, to answer you, the weight has gone down. Okay, I cannot put a number, but from a good and bad asset perspective, bad is not more than 10%. Yes.
I have actually had some exposure of my clients with AIFs who had exposure with reality. I find at the end of the period where they're supposed to conclude the transactions, they usually pass on a very big loss to the investor. And my experience is that it is a standard practice there. Considering the number of exposures of my clients that I have come across, I mean, they have not been given what they are promised, and they have suffered losses. Now what happens is income part they pass on to them initially, and the capital part they write off. So what happens? That poor investor, he invests, he pays taxes on the income part, and then is nowhere to write off those capital losses.
I can answer you in multiple ways, but the way our presentation is going in multiple. So to answer you, sir, it's a typical problem of India. Okay. I hope I'm not been recorded.
No, you are being recorded, so be articulate.
So,
yes, thousands will benefit from this
no, I don't
conversation.
So it's a problem of India. Okay, right from the enforceability and the way things are structured. These investors, if they are foreign investors, they take a hit from a currency exposure as well. Okay. Plus, what happens in case of AIF structure? Okay. The entire discipline is being disturbed. In case of NBFC borrowing, a borrower has to pay month on month or max to max quarter on quarter. Those who have been doing back-ended structures, okay, they actually are spoiling the discipline of the borrower. Assuming, because what happens is, in case of this AI structure, a borrower has to pay kind of double the amount which he has borrowed, which is no way in the world possible, because people do not keep those side pockets to keep the money. Okay, they just spend, they invest. Forget spend. Spend is not a right word. They may spend, they may invest, they do whatever, but they do not 100 rupee borrowed. They cannot and will not keep those side pockets such that 200 is left, 200, 250, because they would have been promised 20% IRR after 5 years. It would be 250. So, sir, it's more of a disciplinary. Okay, so that's why I said ki AIF structure mein these are all practical problems which we see the way things have been evolved, because the number becomes so large. It's not regulatory. I'm just trying to say this discipline is behavioral. So
but there's a regulator. There's other regulator, not RBI.
See, SEBI regulations are different. Okay,
Capital market.
You can have a private AIF.
You can have private AIF.
But that's the space, sir. The type of structure which NBFCs have stopped by virtue of regulations which AIF has put in place. Probably a few years down the line, when a regulation will cover AIF, probably some other type of trust structure will come into picture.
So it's again evolving rightly. So the way RBI wanted to be strict, see, RBI is also evolving. The way RBI is bringing down all the regulation now and then, they are learning from what pain point the market have gone through. They have to plug all those pain points. Yeah. It is designed for affluent mass who has the ability to absorb the loss if it comes to them. That's why it has been pulled out of the NBFCs, right? Because
exactly.
NBFC accesses the capital market. So in case they do not repay the loan, capital market is our public money.
Money giver knows the risk. The money giver is getting actually.
Yes.
That's more important. Just finish off the slides, no? That's more important.
I'll finish it one.
Because open forum is very powerful.
So
How many more slides you have?
I just have 2 more. It's,
Do that. Yeah.
The
Then-
important point
Yes.
is when it comes to real estate, I'm just sharing my experience. I've been a borrower also. Being a CFO, most of the time I've been borrower and the person who answers the rating agencies. Real estate is such a beautiful subject that everyone knows everything about it. Even the panwala knows. They even contribute most of the time. So
Gold and real estate.
yeah. Okay. Next is about maintaining provisions. Okay, maintaining adequate provision on loans and investment is critical. So when I made a statement about how much to create the ability for a balance sheet to absorb a loss is important. When you have been told this could be a possible bad asset, maintaining a side pocket for absorbing these losses is nothing but provisions. Provision, now I want to also take you through both RBI as well as Ind AS. Okay, RBI has some minimum stipulation. It's different. Okay, I think Ind AS is wonderfully designed, but it has its own abuses or otherwise. But
ECL.
thanks to the auditors, since it's been asked upon how the model has been designed, it has been improved a lot because it has been based on the behavioral pattern of the underlying asset which the NBFCs are operating in. Whereas in case of RBI, currently it's like 0.4% on the standard book. However, they may or may not be true in terms of the behavioral pattern of the time when these loan books were originated. Okay, so based on the behavioral pattern, if you really apply and create those provisions, it's good. That's a role of CFO. But importantly, if you apply the management overlay over and above the model, is more important. See, all books are good, but when it hits hard, you just be prepared and you make all the cushions in the balance sheet. We do it personally also. Why not do it on the balance sheet, the corporate balance sheet? So those things are important. So as an advisor, as a consultant, as an auditors, these things are important, but it's all about management's acceptability of the same, the ability to absorb it, and intent. That's one. Coming on.
So what are the abuses of this provision, ECL provisions, or?
So abuses of ECL provision has been how do you design the model? Okay, how do you consider the global factors? Because ECL, if you really read, it is very vast. Okay,
Very forward-looking also.
very forward-looking also. How much do you factor for those forward-looking? How much do you factor for the global factors in case if GDP is changing? So people do not factor it. People do not factor from the behavioral pattern. They can choose how to design, cut. A data can be seen in multiple ways. So those multiple, how do you see it is important for you?
It's simple, Manoj ji. What is exactly?
I'm talking about abuses, huh? Gagan, abuses.
Abuses.
Yeah.
I'm very mindful
Some
of
examples.
No, it's as simple as that. As Gagan said, that El Nino. So I think it was yesterday or today's paper that had Mr. Deepak Parekh's interview about shortfall in rain, right? Since last 8 years, this is the first time. So how do you factor in that in your model? Because that's a present and clear risk, right? If you have been, any sector for that matter. So again, that is something which can be very subjective. You can have a quantified, risk which is attributable to that in your model, but you may ignore it also.
But that's on a macro basis. But RBI is very clear that stage 1, stage 2, stage 3 have they not plugged all abuses?
No, it's judgmental. Because
let me answer you, okay? In simple words, RBI is still seeing things from a DPD basis, days past due, 30 days, 30, 60 and 90 broadly.
Tangible evidence, simple.
Tangible evidence,
Simple, yeah.
They are ignoring all the factors which are subjective in nature. In case there's a deterioration or impairment in the underlying asset or collateral, who's going to see that? It's only management who has an access for that.
You mean payments are taking place, but actually there is a underlying impairment likely to happen.
Possibly. So let me give you one example of it. Mr. X is a borrower. Okay, he has some underlying project. Project is not succeeding the way it was projected it to. Project may not throw the cash flow the way it was projected it to. Ultimately, the dependency on the repayment is on the underlying project. So who is going to see through all this? The management who has access, and management should ask relevant question to the borrower to get the access of the information. So those are completely different. How do you design your monitoring? So even if a management has an access and if they choose to ignore it and design everything or implement the balance sheet only on a DPD basis, that's an ignorance, right? So that's why I'm saying ECL has its own nuances, but
with inspections and divergences, what happened in the last few years, particularly in banks, and that more information, like if you default on one bank, then all the other banks also, they come to know it, and then they make provision. With such supportive systems is not tightening this.
So those kind
earlier
of,
that was not known. Now it is very clear.
Those kind of data is only available to banks and interbanks. It's not available to NBFCs. Maybe Crilic's CIC CIBIL data are available, but these kind of data are not available to NBFCs on a real-time basis, which is made available to banks. I think it's some time away when NBFCs would also have access to that data and they would be able to assess on a real-time basis.
So we need access to that data. NBFCs.
I've seen some of the RBI inspection reports. They cover all the policy reviews also. They review various policies, and if they would review a policy like this ECL, which is so qualitative and subjective. Do they have any comments normally?
They do. ECL is their favorite topic actually for NBFCs. So they do challenge. I mean, at least Gagan may.
You're right. Sir, my observation is few audit firms, who have borrowed this ECL knowledge from their global partners or any other partners, they have been able to design or understand the ECL much in a much finer way. Okay. However, I think RBI is not that up to mark in terms of that understanding, but by and large what they see is the provision output throwing from the ECL model, is it short from the what has been the IRAC norms, 0.4%. That's a broader thing. But having said that, even we as an organization, as a corporate NBFC, we have evolved the ECL completely. I see year on year we have just implemented more and more to make it more robust. So ECL, there's a lot much to do. Okay, few more audiences, few more observer comes in, they ask, you haven't done this, you haven't followed this, oh, let's design this as well. People read, right? And there are people, it's always the people, how you read a regulation, you would see other important aspects have been covered, it's fine. But few of your team member might come and say, ki, these finer things have not been taken care of. So you try to implement it. You try to make more robust. So ECL is still an evolving subject. Think about it, sir. RBI has not implemented for banks.
They wanted to do. Last year they wanted, but then.
See, their want and ask is different. Unless and until they get a confirmation that bank's asset quality is robust, ADS is not going to be implemented. So it's not about ECL.
The present system is working well, and the strength of the Indian banking system is far more robust than international banks.
As compared to a few years ago. So maybe
far better than China.
Away, maybe 1 year, 2 years.
Far better than US. So it is much more robust. So it will come as its own time based on feedback and interaction with the
but then having said
stakeholders.
Having said that, I mean, there is the next topic is all about internationalizing the regulations, right?
Yes,
Fair value and all that.
Yeah, we'll do that.
So
that's why coming to that. One more slide, no?
Yeah, I have. I just have one point on.
Second point. Elaborate on it. Breaking gap.
I'll first finish the second last part, and then I'll data maintenance and technology. I have always seen, maybe we are from a wholesale banker, but we have some retail assets as well in other NBFCs in the group. Data maintenance is really critical. It's the most valuable asset for an organization. It's not only about data theft, what I'm referring to because of the recent bill. Okay, but I'm more referring to how this data is collected, maintained, protected, and last is analyzed and used. Because the way it can be analyzed, it can be put to multiple use for enhancing and augmenting the revenues of the organization. So this data is really relevant. More now, this was more from business perspective, but now from regulatory perspective, RBI is no longer asking you data only on the quarterly basis or yearly basis to NBFCs. the way, sir, I am seeing and observing RBI and the way I am interacting with them, they ask data on weekly basis. It's not only that they would send you an email. I have seen and observed them sending WhatsApp. Send me this. CGM is asking, so and so person asking, which means they are also being internally screened. They have also been internally questioned about the way and functioning of NBFCs as a larger, because NBFCs have become large enough to impact the market. It's a systematic risk. So RBI wants to look at the data closely, and it's been done at all senior levels. I've been told at deputy governor and governor levels as well.
So does WhatsApp allow you sound sleep now?
By the way, I have deactivated my WhatsApp from 11 o'clock onwards. So 10:30
even
PM
for the
onwards,
CGM.
I do not receive
Even for the
calls.
CGM.
Even for my management, I do not receive any calls post that.
Okay, so up to 11 o'clock you are ready.
Yeah. Anyway, so last is being a bridge. Okay, being a catalyst, both from regulator and management, the respective business units. We as CFO, we get multiple data points, we get multiple access to information. Important is how to get this information. We have access to information, the way regulators are behaving, the way compliance things are going, and the way asset is behaving. Importance is to become a bridge, become a catalyst, and provide it on a relevant time to the management decision making authorities, such that in case some decision needs to be taken, it could impact both from a cost perspective as well as revenue perspective. That timeliness makes a huge difference. So in case, suppose from my perspective, assuming in the market from a borrowing perspective, rates have changed. Something is from an availability perspective. From an NBFC being wholesale, if in the market there's a large sum of money available, should I take it, should I not? If I give this information 3 days down the line, it doesn't have any relevance. If money has become tight, should I borrow it even if it's at a higher rate or otherwise? So being a bridge from both asset side, liability side, it's important, and putting it up to the management right time is important, because if the money can be put to use on an asset side, in case they would have some transaction which I may not know, they would have certain transaction which they would be letting it go because of rates. You can put those relevant rate at a particular time. There is an availability of money. Assuming they would thought the money is not available, if I showcase them the money is available, they can make some incremental spread. So that being a bridge is important from an NBFC. See, banking has a platform. NBFCs do not have a relevant platform. Banking has an access to interbank money, repo rate, reverse repo. In case there's a even day-to-day shortfall, they have access to an alternate source of fund, which is not the case for NBFC. NBFC has to manage the treasury by its own, on its own. They cannot live with a shortfall kind of a concept. They have to be in their broader framework. If they have rupee 100, they can spend only that 100 or 95 or 90. They cannot lend more and do an interbank borrowing at the end of the day. It's not possible. I missed one particular part on the data maintenance and technology. RBI is evolving their system. So for us as a chartered accountant to submit the returns and all, I think it's some time away, maybe a year or so, when things would stabilize. So how you capture the data and collect it with relevant tags and how do you map it, it's really important. This is something which we should advise our client or organization on a data capturing, because it's the most valuable asset, both in terms of reporting, because otherwise if it's not been captured properly, we waste a hell lot of time in terms of data accumulation and reporting it to the regulator.
So do you face a lot of issues about difference in the interpretation of index?
No, we do not. It's been 3 years, so have gone through the cycle. So initial first 2 years, or maybe the first year was challenging how to interpret it, because there was always a thought whether we should be on the regulator side or the NDS side. Now it's pretty clear that you have to be on the NDS side and be conservative. At least you have to follow minimum what RBI is saying. Okay, over and above, if you have some additional disclosure, that's completely fine. Over and above, if you have some provision, being conservative is the best strategy.
So now we had one case where with ERC, which is slightly different that RBI expects you to follow RBI if there is conflict.
Sir, I have arrived at such conflicts, and the way I have taken call most of the time, being conservative is the best way. People or the businesses might have different views. That's a conflict which we get into, but resolving that from a disclosure perspective, it's important. I have not covered here, but the way NEFRA is behaving, okay, from with the auditors, I'm telling you with my confidence that in no time they will come into corporates as well. And the beauty is none of the NEFRA members are chartered accountant. I really like it because it's an independence. It's a complete independence because they really go by the rule book then. This is what has been mentioned. Have you followed this? To prove this, it's it's a problem of a chartered accountant then.
But they have CAs and a part of the team.
Yeah, they've been outsourcing that.
Yes.
It's also the people who are facing with the decision making, they are non-CAs. It's been designed that way. So
IAS officers.
It's been designed that way.
So the CA has to qualify as a CA and then join the IAS and has to be in the department and through being the right person at the right time.
Like an accountant member.
Become an accountant member and this.
A judicial member and accountant member.
And not take membership. So can then claim independence.
Last point, second last point, impact on financial. Any regulatory change, I see it from a key perspective. First thing I see it from the key ratios and the stakeholders requirement if it's getting changed. Second is maintenance of covenant. In case if it's ever impacting any of the covenant which has been pre-agreed with the lenders or the rating agencies. So these two things. Third is I always think from a stress testing. Any regulatory change, I think of stress testing. I try to do some back testing, and which has helped me so far. But I'm just saying that any of these changes I see only from three perspectives: covenants, ratios, and stress testing, and it helps. Compliance strategy. Compliance strategy, in a nutshell, because of resource allocation, we operate with a mindset that.
One important issue, you talked about AML earlier,
yeah.
And also PMLA comes, KYC you talked about. So to what extent NBFCs are responsible for PMLA compliance and the recent amendment which has taken place on the draw law CA? And do you involve CAs also in certification for PMLA compliance and KYCs?
So
and your perspective on it.
So from a regulatory, it's not required, but there's a categorization in terms of NBFC from high-low risk, high-low medium. You have to identify or categorize your client as high-low medium. So those falling in high risk, we do that. A third party certification.
PMLA? Nothing. PMLA.
PMLA, I'm telling you.
Okay.
PMLA, we try to do a third party certification, a third party independent party checks, a separate audit firm or separate internal audit firm checks and
So what size criteria? How does that take place?
So it is based on
100%, 10% subjective.
From low, 100%.
Huh? From?
In case of high risk category, 100% of the clients have been assessed.
Okay.
Certified.
So in certification, it is mentioned PMLA?
Yeah, it's been mentioned.
And KYC?
Yes.
Okay. And you take it from a
background check, right? Background check or net worth certificate?
No, there are two things.
Is it a CA certificate?
I'll answer you.
And why should we take the risk and not based on what information?
Okay. So there are few clients from onboarding perspective, we try to do an enhanced due diligence. Okay.
By client you mean both the borrowers and
borrowers.
Suppose there are FD holder or entity holder.
No, that cannot be. So that is by default been done because assuming they have a demat account, which means they have gone those rigmarole, or when the depository would have opened their account, they have undergone through that exercise, right? So we have to rely on that exercise, that's why they have, assuming you have a passport, I would assume that you've gone through those rigmarole.
When you have a demat account, the risk of PMLA
goes up. It's more on the source of fund, flow of fund. So we are thinking more from source and flow of fund. Whose money is it? How the money has come?
So do the basically lenders feel?
Who? investors. Yeah, they lend to us, but for those cases we do not see.
You're not required
I'm
to.
talking only client from borrower perspective. So from them it's
So
important.
eventual use of funds.
End use certificate they would be getting.
End use certificate.
End user.
For all transaction, all disbursement, we ask for end use certificate. Certified
For
by tax
disbursements,
authority. All
not for
disbursements.
fundraising.
Fundraising, no. Fundraising, we are the recipient. How could we?
But that may come from
But
any
we-
source,
no,
including
It comes-
PMLA related.
No, it comes. So mostly for us, all our lenders are institutions, bank, mutual funds, and insurance companies.
That's
Most
all.
of them. That's all.
Okay.
Except when we raise through NCT. So NCT
Yes.
is market driven. If they have a demat account, we don't have to go. That
Okay.
rigmarole,
Okay.
So point is, when we borrow, we give an end use certificate how the money has been utilized, and
Right.
which has been
True.
certified by a third
Yes.
party, chartered accountant
Yes.
or statutory
Yes.
auditors.
Yes. Yeah.
But while we lend money, how the monies have been utilized, we also ask for end use certificate, and
Okay.
RBI has been on top of it.
Okay.
They have been asking.
Okay.
Okay, they has been asking two things: the credit information report and the end use certificate. In case while the loan was sanctioned to a person X for a certain purpose, in which has been mentioned in the sanction letter, has it been utilized for that purpose or not? For which have you taken an end use certificate? What have you observed? Have you maintained MIS's database? What substantial?
And PMLA is mentioned in that.
Yeah, PML is not mentioned.
It's not mentioned in
It's not
that.
mentioned.
It's not mentioned in that.
It is end use. That's sorry. It's not.
It's not mentioned in that.
See, certain, I mean, while we were discussing this, that certain other financial institutions like a mutual fund or a bank or a AI is worried more about the investor side, PML.
Because
KYC.
they are non-institutions, so they are worried because they are dealing with non-institutional investors.
Correct. Yeah, and there it's a direct PML angle that whether their source of money, the money they're giving you, is not dented.
Recently, it came up, a very issue came up just a couple of weeks back. So, why a CA should sign a certificate? Certificate is under UDIN now. So, everything is recorded. And on what basis can he sign about KYC? And Ramesh, for you also. And also mention PMLA is mentioned in that. And a CA gives a certificate because it is required. So, some private banks are asking for it. They tell the client, and the client goes to somebody, the CA, to bank is asking for the certificate. What is your experience in this?
Network, only network.
Ramesh?
Basically, the thing is that from the PMLA source, if the client is in high risk or if there is various categorization. So generally thought is that suppose his CA is supposed to be a generally statutory auditor who is filing income tax return or doing so many services for him. So that particular CA must be knowing to that firm, maybe either your firm registration, GST registration, then maybe having some long relation of 5-6 years. So he is one of the best person who can understand entire the person's identity, business identity. And from that perspective, see, PML is again what is that? One should know about that client. That is a basic understanding. On that basis, he can give the certification for that because he is having his registration number, company number, firm number. He is certifying from past 6 years, 7 years. GST.
But is the CA not taking necessarily higher risk?
See,
Because ultimately today nothing has happened. After 4-5 years something happens.
No, see,
and
as on today, if you see from the corporate governance perspective, I'm seeing from actually I'm doing some research in corporate governance. So from the corporate governance perspective, as on today, even if I can give the best example. When earlier independent director, you used to have lot many people used to interested to become independent directors. As on today, if you go and see really in market, people are least interested in independent directors. Why these things is coming? Because of the accountability.
Right.
So that is the way.
Yes.
See, suppose somebody, now even statutory auditor is certifying the balance sheet. On what basis? True and fair view. Who knows what under this one? Now, the best example is that the cooperative bank, which gone bust in Bhandup, PMC. Okay. The entire system was from the inside that the clients were not there. What concurrent audits is there? That behind. So even though that lady has been arrested and has been in the jail, that who is doing the concurrent audit. So this thing is coming.
Yes.
Now every profession has risk, so we are taking also risk. And this is a professional risk. How? See, as on today also what CA is doing? CA is doing the basis of paperwork. In the inside the paper, who never knows? So that risk is always there. That is a profession risk.
That's there comes one more additional skill where I've seen many of the statutory auditors having good friendship within that company. So they get to know many more things.
Many more things.
Acha Gagan, two things for you. One is, if there's a fraud, or in case there is any experience you can share, to what extent you feel, CFO, you are responsible. The fraud would have been done by CXO, who has some KRAs, and is driven by incentives. And your accountability is under MCA Act, financial reporting, and etc., and also professional conduct liabilities. One is that to what extent you are responsible, and whether the role of CFO in it, whether the CFO has role or not. Second thing is, we talk about negative carry. 2.5%, 3.5% based on our numbers. If you said 9.5%, 10%, and also 6.5%. Suppose you have 3% negative carry. Now, as a CFO, you say it is good. Fine, because you are protecting yourself. I don't want to default. I'm a CFO. It should never say I have not met my commitment, because cash flow management is CFO's role. But this is totally in conflict with the KRAs of a CEO who has to maximize profit. Very clearly. Possibly there may be ESOP, listed companies, whatever, but his KRA is profit. And the CFO is telling me negative carry. Negative carry, 3% negative, why should I do it? And if the amount is quite significant, I can give you some examples of some companies. It happens in the case of India Bulls Finance. There was a 2,000 crore ECB. Because of afraid of bond default and under tight regulations, they put 50% in FD over 6 months before. And the negative carry is quite high. The day they repaid and disclosed to the exchange, there was a rejoice. Oh, they are not defaulted. Although they were not supposed to default, liquidity is coming and the CEO is again hammering every day. But it is a conflict with the CEO's role. How do you see that conflict? Or the CEO is comfortable, okay, CFO wants negative carry, no problem. And how do you balance it? So,
I'll answer both the questions. So, question number one is the conflict what you talk about in case of a fraud being done by the CXO.
CXO or anybody?
Or anybody.
Yeah, it will be under some CXO.
What is the role and accountability of a CFO? I take this thing as in a simplest form is the day CFO is exposed or it's in knowledge or is in possession of that particular information that something intentionally has been done which has not been so far appears in a good taste, it is his responsibility to escalate and bring it up to the next level of authority. If he is not doing it, okay, and if he is not doing it, it means response. He's equally responsible. Concealing of that information means he's equally responsible. If he's not comfortable, he should step down. As simple as that.
Achha, now he's not concealing, he will delay.
See,
delay.
We can mince with words, but I'm pretty clear if he's in knowledge and if he's not bringing it up to the relevant authority.
Authority, you said. That means RBI or SEBI or MCA.
There is always an
not the board.
Escalation.
No, he uses or board or is it authority?
Both, no.
Both. Yeah.
Listen,
so it's not only management.
I would not go to
I'll not go to regulator. Even I'll not go to the regulator. Listen, you didn't allow me to speak. I'm saying it's an escalation matrix, okay?
Yeah.
If it's the CSO, if it's any particular business unit, escalate to his boss. If he's the ultimate boss, then you put it before the board. That's about it. And if you want to live with it, then it's your own problem as well. You're equally responsible for concealing it. Simple.
So your accountability gets over when you report to the board?
Yeah.
At the next earliest board meeting?
Yes. By earliest. You report?
His report is also mentioned that you report to the CEO.
Yeah. So
is that mentioned reported head of audit or CVO?
The day you report, your responsibility ends. Technically, you are not responsible.
Yes, right. Fine. Yes.
Then you are not responsible, but ultimately, if you're still signing the balance sheet, which you are in knowledge of something, then
Yes.
you should rather take a step back.
So simple. So report to the board.
Report it to the board.
Yes.
That's your authority.
Yes.
And he made a very right statement. If it's a problem of the house, let it resolve it within the house, not go to the regulator. That's not a right ideology.
So board will decide.
Board will decide.
Simple. And you
Board
stay
has the
on.
authority.
And you can do it immediately within 24 hours by circular or by WhatsApp.
Yeah, whatever.
Yes. So as long your responsibility is done.
Means is not relevant. Means is not responsible till the time you inform.
Yes.
See, RBI, good is when RBI comes for inspection, they also try to understand while the credit assessment, whatever you have done, you have taken some calls. Was it reported to the relevant authority, if it's credit committee or the credit management committee or the audit committee or the board? Till the time it's been disclosed and informed, they are fine because it's a conscious call being taken by the management. If it's a risk being taken, it's a conscious call or risk being taken by the board. Then it's not a particular team, business unit or person is responsible. Please understand. Even the regulator behaves in this way.
So CFO comes to know, then he should report to the board. If the CFO doesn't come to know, but there is a fraud, significant.
If it doesn't come to know, if it's really because of
CFO is responsible.
His negligence, then he's responsible. If it's because of his negligence, he's supposed to adhere to some routine check practice and monitoring practice. He has ignored, chose to ignore, then he is responsible now because of his negligence. Act of negligence and omission.
So now CFO is responsible totally for monitoring of
not monitoring of
fraud.
Monitoring of certain information which he does in his ordinary course of day-to-day operations. Correct. Not as a course of going extra mile to dig out something. Not for that.
So the CFO would ask the head of audit or concurrent audit to ensure it is reported to me.
CFO generally takes, CFO as a firm, we all issue a compliance certificate at the end of the quarter. Okay, so whereby respective and relevant people give a confirmation to the board that yes, it's in compliance, and if he or she has to take back-to-back a certificate or an email from anybody else, maybe CFO is required to take them in. CFO, company secretary, they should. If they are not doing it, it's their error. Let me complete this last slide. I'll still answer you everything. From a compliance strategy, I'll make it simple. It's all about time to inculcate a compliance culture, introduce technology in place, because if you do not allocate resources and equal culture awareness, it's not going to happen. It's only and only about creating awareness, creating sensitivity surrounding it, and use technology for that thing. Technology could involve reminders, could involve some throw-ups, pop-ups, but that's important. Training, culture building is the only way, only mantra where you can build in the ecosystem, imbibe in all the relevant individuals, part of it, that this is important for the organization. That's about it. Last, whatever the regulators are doing, it's only and only in the best interest to keep the ecosystem, the company, the corporates, and the periphery around it stable and safe. Any questions?
KRA, CEO, CFO. Negative
carry,
profitability.
So,
that is one of the examples. There could be many other examples.
I'll answer now. So, CEO has a responsibility of maximizing the profit.
You are ready now.
CEO has a responsibility of maximizing profit, and CFO, if he wants to play safe from meeting its debt obligation, people try to achieve a balance and mix. Okay, like a bid-ask offer. CFO says assuming a maintenance of 2%, 5% is adequate to meet our requirement. It depends on two factors again. The treasury to be kept on the balance sheet depends on the accessibility and availability of the funds in the ecosystem. During credit crisis, the funds are not available. It would have made more sense to keep high cash buffer. Today and thereafter, during post-COVID, when the funds were available in abundance and in plenty, it's not relevant. Okay, it would be foolish to keep excess cash on the balance sheet. So it all depends on the availability and access to the fund and the time it would take to access the fund. That would make the entire difference. Plus, with this conflict, if there's a smart CXO, he would understand that it's in the interest of the firm. But if he takes a call, ultimately CFO has to bind by it. Okay, but if a smart CXO would always understand the market conditions, because he's there to do business and maximize it. It's not about negative carry, but he has to also maximize the larger business. He'll only be able to do if he survives this particular day, month, year, quarter. So how he thinks visually is he wants to play for the day, play for the year or a decade, it's up to him. That's balance always keeps on. And that's a good, healthy debate or discussion which always happens.
So go on an agreed budget.
Yeah.
CEO, CFO agrees and ratified by the board.
Here I would like to have Manoj on this point also, where you have mentioned that India Bulls has kept the amount in FD. So I am aware of that point of time. So India Bulls bonds were available in the market with a huge discount.
Right.
So that is the reason they have to keep the funds, because since your marketability has gone into the task that time. So India Bulls bonds literally available, I think around some 80 paisa या मतलब 90% या 75% discount में मिल रहे थे. So that is the reason why they are foreseen that कि was in the next 7-8 months or maybe the 1 year down the line, I could not get that funds easily, or maybe if I get the rate will be the exorbitant rate. So that's why for the conservative purpose, CFO has kept that money in the FD. So that once I breach that, once I repay that, my creditability goes improve, and then accordingly I will get easier access to the funds. So it is all the management techniques. Everybody is managing. COVID के time पे सेविंग में पैसे रख दे 2-3 लाख रुपया, क्या करेंगे? कभी आएगा कोविड मालूम नहीं है. I know that if I can give them FD or I have opportunities. But that time what we have taken a call, less saving में पड़ा रहने दो यार. So depends. Every time circumstances will tell you कितना है.
Today's example, if you can see all Adani dollar bonds at what price?
Are?
Share a screenshot.
Are?
Not Adani, I'm sorry. Vedanta.
Yeah. They are at discount.
They are at huge discount.
Yes.
65.
30 to
yes.
30 to 40% discount. Yeah.
Yes.
You can get even at 50.
Yes.
It's not getting traded only, it's just getting quoted.
But they are not kept 50% FD.
Huh?
Sorry?
They are not kept 50% FD and negative carry.
What they have done.
Yes.
I am just talking about what
No, true. And this here it continued for a long time, even under now conditions when there is super liquidity.
So this is the things is depending upon.
Liquidity for market, for them they always distributed huge dividends in last 2 years.
Who?
Vedanta.
Yeah. India Bull also gave a huge dividends. Then they reduced in the last 2 years.
They had a discussion with LIC for their break-even point, their break-even price. Then they tried.
So CFO, as I said, even though I'm not in that role, but CFO is the larger responsibility. That is first, I think, priority that I should not default.
Exactly.
Whatever may be negative cost.
Simple cash flow management.
Yes.
Simple.
And for NBFC, he has huge difficulty because they are largely dependent on NCDCP.
How much percent of time your kind of work profile goes into fundraising?
Majority
Majority.
of the time. So more than 50%, I would say. So on the road, so fundraising involves 3 things: meeting rating agencies and the existing as well as prospective borrowers, lenders. So majority of the time goes in that. And designing internally also the way things should be seen, interpreted, and agreeing on covenants. So those discussions, it's not only about having a relationship and it's been done. You agree on those documentation, those covenants, what as a firm you can accept it and abide by it for the future years, because this borrowing is like a 5-year tenure, and once you agree on certain things, everyone wants to follow it, right? You borrow with XYZ bank, certain other banks would also want to follow the same footstep.
It's really a frequent issue in market.
Yeah.
What's the average cost of borrowings?
Around 9.
Good. So see, that's lots more expected from you.
Why?
We have covered one part, but this is a huge part. No, I'm glad Yogesh raised that point. Fundraising, right? Yes. And you said majority, and we have just covered the base. So there is a lot on this. Ultimately, the CFO's role is to be the lowest cost borrower in the market and the best rated. It's really wonderful. And Santosh, you are ready with the latest update?
I am, yeah.
What came?
How much time you have spent on ENM?
That's part of that.
About 15 minutes, and then Anil will do. Anil, Sunil,
in the cash flow
they have something ready.
To assess how much is your inflow and outflow is the most challenging part. throughout. In fact, I would say meeting lenders and rating agencies are simpler, but predicting the cash flows.
You will read. You want to show something on the screen?
Shorter time frame is the most critical part.
हाँ चलेगा. This.
कि इसको पैसा दिया कितना इसमें से आएगा. Okay, how much should I assume that this money is going to come? And from a portfolio as a pool, even if I have a contractual receivable of suppose 500 crore in a particular month, how much should I really assume this is going to come? Because I would have timing mismatch. Really, someone not paying it. So that's factor. I would really like to add one more thing, which I think is the most important when I assess anything. Artificial intelligence is one thing, but behavioral pattern is the most important thing, because if you apply behavioral pattern in all these cases, it really gives you the output what you're looking for.
So like banks have core banking solution which gives a lot of admired data. NBFC has something similar, designed customized for NBFC?
It is. So it is relevant for the retail NBFCs. In our case, it's a wholesale NBFCs, it's not that relevant. But for a group, our other group companies, it's really relevant.
Yeah.
Because we have HFC and those things. So CMA and all those things, the CMS, it's relevant for them.
So therefore, all your projections will be all offline, not manual.
I have one more question, but not related to NBFC. It is related to banks. I think. You answer. Actually, when the banks disburse loans, right, they ask for the end use certificate to charge. The bank statement is in the possession of the banker. Where is the need and occasion for getting an end use certificate?
It is.
No, sir.
Why?
I can take question. See, certain times what happens, there are two types of disbursement. One is straight through processing. There they are not asking. Suppose if I have given for the loan for a machinery, and machinery is taken from say XYZ.
The money is going directly to vendor.
So my payment is directly going to the XYZ. So there I am not asking the end user fund. But there may be possible is that some tranches wise disbursement is happening to the customer, and then customer is giving, like construction of site A, B, C, D, N. There the bank will not have a control. If that vendor straight through processing, no problem. But if there is in tranches to the different vendors, so bank didn't have the control on this aspect. So I will require the end-use certificate, and then some asset is created over a period of time. It's not like that something one time. नया भी factory बना रहा है. फैक्ट्री में पतरा डालना है, मशीनरी डालना है, उसका वेंडर, इसका वेंडर. How the bank will come to know all this setup? For that purpose,
name of the vendor. But वो vendor कौन है, related party है,
कैसा है. So जहाँ
एग्जांपल एक कार लोन के केस में क्या है ना, बैंक के एम्पैनल में 10 होते हैं.
हाँ, तो हम लोग नहीं लेते.
शोरूम में जाओगे ना, बैंक बोल देता है हाँ ये एम्पैनल पे डायरेक्ट पेमेंट उसको हो जाता है.
तो directly it will go to the vendor.
Now I understood this very well.
Very straight through है, जरूरत नहीं है. But with the
One of my clients, he had a credit balance in his OD account.
Okay.
So he transferred it to his family.
Okay.
That his system is generating very continuously. Why and where you have used this money? Why and where you have used this money? And I have given him a CS certificate because this was the excess fund lying in an OD account. So
I should have got it closed actually. If he is.
No, that was temporary.
No, sir. So, sir, I can give this.
Yeah, I want to understand this.
See. The thing is that overdraft and cash credit, it has been a regulated account for your business. What you are doing, you know, credit balance. So, credit balance is not necessary that it is for your personal use. Means you can buy gold, you can. So that should not be the purpose. That's why the bank is asking. Because cash credit and overdraft facility is purely backed by hypothecation of some business asset.
I do a business, I earn 5 crore.
That is okay. I understand, sir, but from that OD account you must be have done the business payment, and some business payment might be come in advance, so that your account has been gone in credit. So it is something like that. Suppose you are doing the business, you are doing the vendor payments from that account, and some client of yours, this one, you have given the advance payment कि बॉस 1-2 करोड़ आप भी ले ले, मुझे चाहिए दिवाली में माल. तो आपका तो ऐड गया क्रेडिट में, तो दैट डजंट मीन दैट कि आप वो क्रेडिट का पैसा फैमिली को दे दोगे. ऐसा नहीं है ना. आपको जो मैं फैसिलिटी दे
I am very regular in paying my interest.
No interest, nothing else. This overdraft and cash credit is for business. All personal account payment should not be done at any point of time.
I have got the credit balance in my account.
Correct, sir.
I don't have to withdraw.
Correct. Credit balance doesn't mean that, na? Credit balance.
To understand the source
सोर्स है ना, सब अभी क्लाइंट नहीं, ऐसा नहीं होता ना सर, दूसरा होता है ना. हाँ, करंट अकाउंट में रखो ना, वो रेगुलेटेड अकाउंट है. हाँ,
Say for example, he has OD account in SBI and he has other current account in next.
तो आप करंट अकाउंट में रखो ना. हाँ, करंट अकाउंट में रखो, उससे करो जो करना है. आप ओडी और कैश क्रेडिट में पर्सनल,
Two accounts in the same bank.
या करंट अकाउंट और ओडी अकाउंट
Doesn't matter.
Acha, we go. Santosh, ready? Latest development which came about a few days ago.
Yeah, sure.
And would request Gagan and Ramesh to contribute actively. Sit.
No,
Yeah.
I don't have a PPT.
It's a roundtable is like that. Everybody is equal, and a few people prepare thoroughly on that topic. Yeah.
So on 12th of September, RBI came up with this regulation for classification, valuation, and operation of investments, basically, to cover banks.
You can put BFSI same thing.
The background of this is basically, as we know, and as even Gagan alluded to, basically,
First slide.
today the scenario is like this. For all the NBFCs, well, not for all, but for all the large NBFCs having net worth in excess of 250 crores, the financial reporting framework is Ind AS. And for the banks, it is not Ind AS, right? It's IGAAP.
Can you put this on the screen?
The moment you have Ind AS, everything comes into picture. The fair valuation, ECL, everything. And therefore, again, going back to Gagan's presentation, all the ratios are based on Ind AS, right? So you may have a higher GNPA and a lot of stringent financial reporting requirement. And if you look at the balance sheet or the financial statements of any large NBFC, it runs into काफी मोटा एक के रहता है.
There's a lot of disclosures.
Lot of disclosures. And as he said, it's Ind AS disclosures plus RBI disclosures. So it runs into pages. RBI started off with a few years back with a thing that all the banks and NBFCs should be on Ind AS, right? But then as we know that ECL, expected credit loss was one of the showstopper for banks, because the moment you have ECL, you need to have, the provisioning would have increased 5 times, and because of the capital adequacy norms, it was not feasible for banks to adopt Ind AS, and therefore that was indefinitely deferred. Since last couple of years, and we know that post-COVID banks as well as NBFCs, the profitability is wonderful, right? So currently the net interest margins of the banks is one of the best, I think, in last decade.
Even on set committees.
Yeah. So therefore, since last few months, RBI has been mulling on this thing that if there's an opportunity to take that bite onto Ind AS for banks, this is the best opportunity, right? Because you have the numbers, you have the profits to absorb whatever shocks that you have. Last year, of course, there was this discussion paper on ECL for banks, expected credit loss, which there was a discussion paper which had Ind AS concepts with regulatory backstops, which means that you go based on ECL model, but you have a bare minimum provisioning because obviously that's something which, as far as RBI is concerned, it's non-negotiable. But that thing, the IBA did not, support it, and State Bank of India in one of the press analyst conference, the managing director himself said that we are ready for ECL.
Well, we had one of the finest roundtables on the discussion paper of RBI a few months ago, with contributions from topmost professionals in banks, and incidentally interacted with lots of banks, topmost banks, and to see to what extent banks is ready and regulators are ready, and the observation was many of the banks were not ready. But they have to, and some of the banks can't tell RBI, we are not ready. But some of the second tier banks, the CEOs very clearly said, fine, it's your call, and yes, we will implement. Who is the principal shareholder? In some cases, 80%, 70% is with the government. So you will have to fund us. No problem, you implement whenever you like, but you will contribute by way of shares. So this is the CEOs, the MDs, chairmen of banks have personally conveyed to me second tier and then third tier. And some of them goofed up because there's accountability from stakeholders and they had to quantify what is the amount required. And some of them quantified the wrong way. Simple. So as if they will lose, it will impact 50% of their net worth, X percentage of, this thing, advances, and you sell the subjectivity in that method of ECL if it comes to it. But incidentally, there was one strong CFO.
Ex-CFO.
Yeah, one strong CFO at that point of time. So he had the benefit of the response of the CEO of Indian Bank, who is incidentally a CA, good friend of us, and ex-CFO of a BOB, and also Canara Bank and BOI, and some of them goofed up and it got reported by all Morgan Stanleys and all. Some of them they report without even understanding because they don't have deep dive into accounting practices, but they need to report within 24 hours. So that really happened. But the CFO of SBI said, we are ready. Simple. And put in the numbers of contingent provisioning. It is not only the minimum that provisioning. Contingent, we are so much ready because they will know it will be implemented for all at the same time. It can't be implemented only for HDFC Bank and SBI and ICICI at the right. These three are, and IndusInd, I believe, 4 banks said we are ready actually, and they have sent in the balance sheet. Others, question mark. So IBA has its own strong things, and now it's very innovative. Yeah. What has happened now?
Yeah.
Last week.
So that was just to give a bit of a masala to
the facts background, and still there is no standard yet because standard has to be formed after proper discussion and consultations.
So now what has happened is this master directive doesn't again explore ECL provisioning, but the other difficult part about Ind AS was the fair valuation, right? Because if you have to do fair valuation of all your investments, etc., then what happens to the capital, whether it's tier 1, tier 2, etc. RBI has come up with this huge 95-page master guidelines requiring, and this is effective from 1st April 24.
I was going to ask you, you need any special food?
To do fair valuation, to categorize basically,
no.
Of course,
you don't have that now. I thought it was
but basically the big change that has been introduced, apart from the others, is that they have said that all the investments, they are not talking about loans, they are not talking about advances, they are talking about investments in anything, equity shares, unquoted equity shares, debt instrument, government bonds, so on and so forth, need to be classified into 3 categories. Okay, held to maturity, available for sale, and fair value through P&L. The principles, while the names are not exactly the same as Ind AS 109, but the classification. So held to maturity is nothing but your amortized cost model for your under Ind AS 109. Available for sale is FVOCI. Of course, we don't have a OCI concept in for banks, and therefore they have just kept it simple. You whatever gains, fair valuation gains you have, you keep it in the reserves. And then you also have fair value through P&L, where you do a mark to market through your P&L. The good thing that they have done is they have clarified that whatever unrealized gains that you have would be not counted for your tier 1 capital, but it will be counted for your tier 2 capital. you cannot distribute dividends based on unrealized gains, because that was the other concern, because obviously for banks and NBFCs, conserving your funds is something which is important. I mean, it's a very big guideline, but I think this is
your nomination for
larger picture of this thing.
This year I'm a part of it.
Certain investment disclosures they have, the nuances they have laid down. I think it's a welcome change overall. This is one step again towards Ind AS. The big challenge, as Manoj ji said, is the ECL piece, especially for the PSU banks. We'll see when that happens. Maybe later on, maybe in the next thing, we can have a deep dive into this. But this is the big news as far as this thing is concerned.
So it's happening. It is going to that date is when
1st April 24. 1st April 24.
Done. Decision is done.
Yes.
No views, right?
This is not a guidance.
There is no view, sir. So the same guideline, it came in 22 as a draft. So we gave our comment on that.
So you are ready now. You are ready because you are the implementer. Valuation you will be doing and you will be monitoring proper valuation is done.
As on today, we are also in subject to internal and concurrent audit. But now with this guideline, there is a flavor of Indian accounting style.
And fair value will come. Fair value of all this.
Again, for fair value, there are they have replicated the guidance of Ind AS 113. They have laid down level 1, level 2, level 3, higher, levels of fair value. Level 1 basically means that you have a quoted active, quoted in active shares, right? Active market. So in his example, if Vedanta bonds would not perhaps be a level 1 because it's not quoted. Right? It would be level 2 perhaps. So what they have said is whatever gains you book basis the level 3 valuation, which is based on unobservable inputs, that you cannot classify as distributable profits, and that you cannot also count as tier 1 capital. I think some of the finer aspects that they have captured this, it is very good, very helpful here.
So what is the impact of this on the P&L? Simple, bottom line.
And a related question is that currently there were 3 categories of securities. And now as a new one.
So currently, whatever you are holding it, so effectively what has happened, there is a new category of available for sale, which is available for sale, or you can, you will be holding it to maturity. So what they are SLR investments, for example, statutory liquidity ratio, those will be typically classified as available for sale. You would mark it to market on a quarterly basis at least. The fair valuation gain or loss you will be booking in reserves, not in the P&L. Uska 2% you will create a reserve. Investment fluctuation reserve is what they have nomenclated, which will be which will be forming part of your tier 2 capital. Rest of it will not be. So that is the big change. So there will be more balance sheet volatility because this escapes P&L. There will be more balance sheet for unquoted equity shares. They have said that you value it at ₹1 per company, unless you have the valuation which is it's a level 1, unless it's a level 1 kind of a thing.
So no impact on P&L.
It will have impact.
See,
how much impact on P&L?
The big impact is on reserves because this new category available.
So I'm coming to that. So what you mentioned about reserves and 2%,
the second
and valuation of banks is usually done as a multiple of price to book, adjusted book. So the reserves get impacted, the books get impacted. So market valuation gets impacted even through this reserves method.
So today
it did not impact manufacturing companies to that extent because they valued on PE or EV, EBITDA, etc.
So if the bank has been following the current guidelines to the T, unrealized losses would have got booked anyways today, even under the current RBI guidelines.
Right.
What would now get accounted for is unrealized gains, right? And therefore the book size, investment size would only increase.
Positive. So impact is positive.
But then having said that, as per these guidelines, it will be all neon plated and it will be called as reserves, and there will be a lot of disclosures around it.
So there's no negative impact.
There's no negative impact
on P&L or on reserves.
Operationally, but you have to go through the grind of fair valuation every quarter.
Right.
And therefore, operationally, of course, this is a bit of a job for the banks, but from the analyst perspective, this is something which will be a positive.
So optically, we are strengthening our financial reporting system as a country.
Completely, yes.
Optically.
That's more important.
Because
today optics is important.
Because unrealized gains do not get counted for capital adequacy. It won't help the bank from a capital adequacy standpoint, but optically, yes.
Yes.
But substantially also it will impact. Means I see substance over form, and if we are moving towards Ind AS, actually,
as a move towards Ind AS, it's certainly a good, a step closer.
It is changing things in a much finer and positive way.
So what is happening is it's a sweetener for the banking sector. So we have not come with Ind AS yet because of your concerns, but we are taking this because this is going to be optically good and even financially not negative.
So Manojji, even today all the banks do prepare their financials on a pro forma basis under Ind AS and file it privately to RBI. It's not a public domain document.
Since last 6 years.
Since last 6 years.
No, he's doing. How many of them are doing it?
All banks.
All scheduled?
All scheduled banks are required.
All big private banks as far as...
No, that's it. Big are doing, not all. Many have no clue.
The public PSU banks are required to do.
How many? All PSU banks?
All PSU banks. Except for the small bank, etc. All scheduled banks are required to do.
They are not doing it. Large banks are doing it.
They are not required to file it in public domain. But privately they have to file it to RBI.
They are doing it.
So regulators know where the both balances stands.
Correct.
Although they have not implemented the models and all that, so they are filing
They are
the
assessing the
information.
impact. No?
Yeah.
They are assessing the impact.
They are assessing the impact.
5-6 years is a pretty good time to assess.
5-6 years.
Yeah, it's more than 6 years, I think.
From when?
16-17.
Since 16-17, yeah, so about 5-6 years.
Yeah, remember we had a knowledge series. Especially we discussed this knowledge series was I think 6 years back. And we did it within 2 months of it being come.
16 there was one discussion paper on Ind AS for banks. Then come. Then 16
Within 2 months we had discussed in the adjoining room. Detailed deep dive at that point of time.
I think 17 for indefinitely election 17 or 18.
At that time, then the financial capital adequacy issues were there.
RBI is on it. Today, the mutual funds do their filing based on Ind AS. NBFCs do, right? So, RBI is very clear. This is a good time to get the banks to do it because the performance has been good, etc.
So balance sheet में आपका treasury मतलब investment वाला piece and advances जिसमें EC ये दो ही बड़े
Anil,
चीजों को manage
you ready now?
बाकी expenses provisioning तो plus minus 2-5% ही है.
Correct.
वो जो है.
So now this is great, Anil, you will can start on updates along with our team. What? Huh?
Can I take a leave?
Yeah.
I would like.
I'll just mention here while he is here. This year I'm a part of that Central Council Committee for Members in Industry and Business. So there is a CFO. Sit for 1 minute. CFO Awards event on 5th and 6th of January in Taj Lands End. So ensure maximum participation and also Professional Achiever Awards and CFO Awards. We have to see, we have many award winners in our team, Professional Achiever, Tanamoke got an award, CFO. So we used to see there were less than 200 nominations for CFO Awards, including Professional Achievers. This year we should more than double and see who is who, and at least the people who are doing great work should consider getting nominated and getting acknowledged for that. We have seen, we have got the best response here. LIC CFO, 40 lakh crores balance sheet. He spent 4 hours with us a few months ago. 4 hours interactive session. And there are many more. So just spread the word. And I was telling Gagan, people, you should consider, besides getting other CFOs, he is deserving of many awards at this young age. Long way to go. And there are many, just spread the word. And also block your diaries for that day. It is going to be incidentally in Bombay. and incidentally in a very nice place, Taj Lands End, 5th and 6th. 2 days where mainly all people from industry are there. Take benefit of that. Yeah, Anil?
Thank you.
Thanks. Good session.
Yeah. बायोडाटा नहीं है सो इन्फॉर्मेशन पर you do it, huh?
Yeah, the tax audit. PDF.
अरे नरेश रुक ना 2 मिनट.
Ramesh.
Hi.
Thank you. Somebody is waiting for me.
वर्ड लेने के लिए PDF में
खोलेगा नहीं, क्यों नहीं खोलेगा? Cannot open this PDF.
ecosystem. PDF नीचे वाला
PDF रीडर नहीं है।
वो वर्जन का फर्क है।
वर्जन का फर्क। उसको क्लोज करना।
Ask lots of questions.
निकल जाएंगे। चलिए सर।
Good evening, everybody.
Good evening.
Well, we have got an offbeat topic today. Yeah? That is tax issues relating to tax audit. So, actually, how many of us are filing tax audit reports here? 1, 2. No, you are not filing your own. Anyway. Yeah. So, firstly, I would like to introduce my daughter Gitanjali. She is a advocate by profession, and she has helped me in preparing this write-up. And my earlier write-up on filing of returns, which is also with our Manojji. I think Manojji, you can share it with everyone. Manoj bhai.
You can share and
how do I share?
What, carry on now.
Yeah.
Yes.
So now the issue is that we are virtually at the end of the session for filing our tax audit returns, the tax audit reports. In this, what I have done in this compilation, I have brought out things which need to be attended with care, so that we get the benefit of filing a return if we get into dispute with income tax department on some issues. Like, consider the relevant implication of SSE while describing business, nature of business. So what happens? Usually we have the practice of just carrying forward the earlier year's information and proceeding with making of our reports. But usually the SSE's business incomes may have undergone some changes. And at the same, there are certain areas like, renting of premises, investing. This could be either business or it could be under that capital gains or income from house property and all. So there we have to be more specific. Even in case of interest income, some people may have just interest income. Then if they want to claim the various expenses they incur as expenses, they can put it under the head business income. But that time we should mention in our nature of business that we are doing financing activity. So then you get the benefit of claiming expenses as deduction. Whereas otherwise, AO could take a stand that, you have not mentioned in your audit report that you are doing financing as a business operation. So I do not allow you this as a business income. I take it to other heads and then complications can arise. This is one area which we need to be very careful of while preparing our audit report. Then in case of manufacturing also we have to be very specific because our certain deductions, we get many deductions for manufacturing operations, those should be properly captured. Then we come to ICDS. Now see, in ICDS also there is mechanism provided to calculate our incomes and expenses. So there we have to be a bit careful and make disclosures in our reports which are not usually uploaded, but we can definitely make the write-ups in the relevant this 13th column of the audit report. We can be more descriptive and elaborate so that maximum benefit of tax laws or some case laws which have already decisions have been taken, we can take benefit of the same. Then technical guide also provides certain support for this which we can use while making our. Now Ind AS adjustment and disclosure are also very relevant. This accrual principles, there also we have the option, we have to mention what is the method of accounting followed by us in preparation of our accounts. And you know, you have to be careful when the interplay of Ind AS and this accounting that we actually follow. All these things, market losses as we just discussed is also very important because we get reports from the capital market usually and from other wherein the losses are reported till the end of the financial year. But we may have open positions. So open positions are actually closing stocks. So there also we have to see that we properly account for them, because if we have certain losses which are not considered by the AO, actually the principle is net realizable value. So if the dispute arises, then we may have to go for appeal in those cases. So this also we have to make proper notes in our audit reports. Then recognition criteria. All these ICDs, you know, these notes are very self-explanatory. I will not go much into it because we have hardly any participants who are going and doing this job. But anyone is free to ask me any question at the moment. And also I have given my telephone number. So if you have any specific query with reference to any specific clause, I will be very pleased to send you a return email giving you explanation to a specific query. Because I have been in this field for now 40 years doing this job. And what is happening, we have developed a sense of replying to the department. Rather than having real knowledge, we have... तो by default गलती से mistake नहीं होती है, ऐसा है. Then you know this GST is also a very important area because our yes, clause 44 के अलावा भी while you are preparing our accounts, we have the ledgers of the GST department and our own books of accounts. Then there are certain disallowable expenses also. So their ITCs are not available. Their ITCs are, in fact, their GST components have to be loaded onto the expenses. So these are certain areas if we go wrong somewhere, and in the broader analysis of your composition of your element of GST, which is recorded in our books of accounts, could lead to certain assessment issues. If it doesn't match, it will definitely have an impact on your income. Right? So this is one area which needs to be attended because we are signing the audited balance sheet. So the balance sheet has to be correct. So in order to the balance sheet to be correct, either the GST ledger is wrong or our ledger is wrong. One ledger has to be wrong. Now the chances of GST ledger...
Both can also be wrong.
Huh? Both can also be wrong.
In all likelihood, both could be wrong.
So one thing is that either this should match. Ideally, it should match. Now it won't match it because we are following accrual method and the March payments are made in the month of April. So the ledgers will definitely not tally. But that reconciliation should happen while we are doing, and the impact on our computation. If required, we should put the impact in our reconciliation of the computation. Okay, how we are actually taking care of that impact. Because even in valuation of stock, we are supposed to add the values of taxes element, because those ITCs, even though you may have used, but they should be nullified by that component being loaded onto our closing stock values, right? Now another area is, clause number 18 is requiring you to report on this 50C, right? Stamp duty value versus. Now there is one area where you could have an asset which belongs to the block of assets. So there the impact of this transaction will have to be not only reported but also accounted for, because eventually it will affect your block, right? So at the moment there is one case law which can be relied upon. How it is applicable to each different matter will be a matter of interpretation, which I have quoted in here. And then most important is they have now even amended the law relating to disallowance of employees' contribution to funds, ESIC and PF, which has to be disallowed if not paid within due date.
Oh.
Yes. Now there is no dispute on that. Earlier
it was always there, no? It was always disallowed.
It was always there, but one Supreme Court judgment was there wherein it stated that it is a matter of 43B and can be if paid before. Now that 2-3 years when our Sitaraman became finance minister, they amended it forever. So that is one area which needs to be properly looked into. ये नीचे नहीं जा रहा क्या? Now there is one more thing that sometimes we casually look at even profession tax as a statutory due and try to, but profession tax is not covered either by 43B also. It is not covered by any other funds also, because it is a tax which we have collected from the employees and it has to be paid to the government. It is not specifically classified like ESI. So there is no disallowance for delay in payment of profession tax.
It also never parts of PNL का भी part नहीं होता है.
PNL का भी part नहीं है, yes.
Deduction हम claim ही नहीं करते.
Yes, but then ESIC employees contribution is a PMF part, yes.
Okay.
Then 194R, we have to this benefits of winnings in kind, 201 deals, defaults when tax is not deducted and paid, 40A1A pertaining to disallowance of tax when it is not deducted, not paid. These implications will have to be properly reported in the relevant. And then finally we had this GST liability. This I already dealt with.
Yes.
SANVAT has become irrelevant after this. Now, as far as the GAR is concerned, this is applicable to cases involving 3 crores and more. So, I think the type of practice, at least I do, it doesn't arise anywhere. ऊपर आ गया वापस. I am not used to working on a laptop, so that is why. This valuation of closing stock also nowadays, whatever notices are coming, till in last 30-40 years of practice, we have been giving just one figure. This is our closing stock. And in 40 years, I must have done some 40,000 assessments maybe. So, if not 40,000, at least 20,000. Nobody asked me what is your closing stock, but now we have reached an era where they ask us what is you give us what is how do you work out your closing stock. So it has become very relevant now because it's a faceless assessment, and auditors will have no escape from this if they have just accepted one figure. So proper notes have to be maintained, stock details have to not methodology, quantification. How we actually worked out, arrived at the figure of stock.
There will be a lot of calculations.
No, there are so many calculations. Now I am on because Hans locked with one of my clients. I have just worked out his stock based on statistical analysis of figures. So his consumption works out to 80% of the cost price of raw material component alone, whereas in few months it works out to 30%. So I tell him that this nobody will digest.
So are we actually aging of these?
Not aging, you have to actually, really speaking, if you are a manufacturing unit, there is procurement, then issue to production, then normal wastage. The normal wastage has to be sold as scrap or it has to be recycled and brought into production again. And then there could be work in raw material component, work in progress component and finished good component. So there you have to arrive it more logically.
So do we actually look into proportionate of these norms?
So proportionate, this has to be really speaking actual. But what happens is, जैसे अपने घर में किचन में रोटी बनती है, तो उसका इन्वेंट्री लिया जा सकता है, क्योंकि अगर आप 10 रोटी का वजन निकालोगे तो वो भी अलग अलग तो होगा थोड़ा थोड़ा, है ना. So that way every industry will have its own specific issues. Like if you go to certain industries using chemicals as their input, which are not liquid based, they are powder based, so a lot of material flies away into the air. Then in case of liquids, they actually get evaporated or something like this. That way losses are, spillage losses.
Sometimes what happens, like I procure, like I may need it for say 6 months, but I procure it for a quantity which may be for 2 or 3 years. Then
all these things are possible. You have to bring it to your stock. See, what is happening, the component of stock, if we don't prove and we don't have the working, our people, as an auditor, we have to have a working in place. Because now what will happen, earlier the assessments was stored only on the SSE. As an auditor, घर पे जाके सो जाता था. मतलब, he could relax. Maximum his client will go away. What will happen? Nothing is going to happen. Heaven is not falling. But now that AO could send you a letter asking, please share your working papers with us on the issue of stock. So if you don't have any working paper, you are a party to it. And if you are so party to it, there is one clause now of a penalty that the penalty will not be levied only on the person who evades the tax, who helps the person to evade the tax. So if I think it on a very, if this provision is evoked by some AO, how can you stop him from doing that?
And like in a very different context, in banking, what I'm seeing is like even the regulators are coming and like when I was part of audit lab, they used to ask us, show me your work paper.
Yes.
Show me your work paper. Like I don't want to rely on the report what you share. I want to see what is your sampling methodology, what was the population, how did you confirm on the population. So they go into that depth. Show me what wording you have written in your work paper.
True, very true.
I think this faceless has
No, actually, I am telling you now, I have got horns locked with my client for last 1 month. He is not giving me an appointment. Why he is not giving me an appointment? Because he doesn't want to touch the subject. No, he says this audit is his baby. I am paying him fees. So this person has to complete his audit. That is now, but that is an escapist attitude, right? The worst situation, what I am going to do is last day I am not going to sign his audit report. That's all. And the second consequence is I lose the fees that he pays to me, right? So there is an area where because you see, ultimately our fees come from our client. That is the biggest problem of our profession.
Yeah, that's
So you cannot displease him. If you tell them something like this, they tell हमको डराते हो क्या? वो डराते नहीं है भाई साहब.
इवन जो पेनल्टी अप्लाई होती है सीए के ऊपर, अगर वो अप्लाई हो जाती है तो जो रजिस्टर वैल्यूअर जो कर रहा है, वी आर नॉट क्वालिफाइड टू बिकम अ रजिस्टर वैल्यूअर.
So we have so many implications.
तो वो एक implication स्पेसिफिकली रजिस्टर वैल्यूअर के लिए तो है.
See now, I will tell you there could be more level to it. Tomorrow some other assessee face a problem and I am his auditor. They may say okay, he is a tented auditor and you have appointed him. Yeah. Right? So these are the issues. Now, particularly this GST is one very great big area because this has an impact on the GST assessments as well as. Now, under all properties when they are dealt with. Now, one area which I am also having no reply is technically 50C doesn't apply to tenanted properties, Pagdi system. It doesn't apply because it says transaction of land or building. You are not the owner of land or building, so you can't transact it. But actually, you are transacting in land and building because you are by default got the tenancy right on that property. So they levy stamp duty based on the market value of tenanted property. But no transaction can happen on that value because if someone wants to pay that kind of money, he will buy a ownership property. So this is one again grey area. Where again this is related to section 18 also. Because how will you record the income and details in your books of accounts and your block of assets? Everything will get impacted. So now here you will only thing that is going to help us is we have to have our notes in place. We have to take a declaration from the SSE also. Maybe this is a grey area which we don't give to the department, but when the occasion arises, we have to share it with the department. With this deliberation has
No, there are in tax audit in the very first phase we have to represent observations in everything.
No,
because many times assessee don't give us till the end of the day.
Yes.
And to safeguard ourselves, it is like कि हमें वो note डालना ही पड़ेगा.
And no note डालना है उसको upload मत करो ना. Keep it in your working papers.
But then वो accept नहीं करते हैं.
नहीं वो तो नहीं एक्सेप्ट करेंगे तो उसको किसी तरह जैसे हमने डॉक्यूमेंट किया है तो वहाँ पे एक जनरल मेंशन कर दो कि वी हैव गॉट वर्किंग पेपर्स ड्यूली एलैबोरेट व्हिच देयर इज नो प्रोविजन टू अपलोड एंड व्हिच विल बी रिलाइड अपॉन एट द टाइम ऑफ or you can separately file a letter with the AO after the uploading of return and all that. There's assumptions on which the
so we can write on the 3CA जो first report होती है ना उसमें we can give the observation also.
Yeah,
and I had also already given the observation to
at least there is no penalty on you.
Yes.
So consequently, but now that again there is a problem. The moment that addition is there, penalty automatically is going to be levied. There is no appeal, nothing. 271 is खत्म हो गया. So there will be a component of additional tax which you have to pay on addition unless you go for appeal and interest. So there is no scope for getting those implications. Only resource will be go to appeal.
You have to revise the tax audit.
How you can after the year ended? How we can revise the return audit?
Now the assessment is coming very faster. So in last year there were two. So normally tax audit needs to be filed before the filing ITR. So normally the computation which is said, it is on a provision which is not final. So there are few line item in few clauses in tax audit. What are the nature of income which is not credited to profit and loss account. Okay, now there for in a case of proprietorship, we normally there are so many income which is not there. But based on our check, we just for as a disclosure per se we add those income. But assessee has offered those income in his ITR by filing the ITR. But what income tax department they re-added it again. उन्होंने फिर से ऐड किया उसके ऊपर.
Because you mentioned it in.
Plus and there is another clause for chapter 6A deduction. उसमें मैंने कुछ मिस किया तो वो वहाँ पे कि यार ये है नहीं तुम्हारा तो वो डिसअलाउ कर देगा. Because we are not liable for a personal, we are liable for a business balance.
Shortfall and pitfall in the assessment system. Like it happened with me also. I disallowed provision for gratuity. So I disallowed in my computation also. But what happened? There is no matching column in the return, and so what they happened? They issued 139.9 notice to my client. So that client was a very big group. So what happened? That I look after a particular 1-2 companies. They have say 100 companies. So they sent this 139.9 to the CMD. this auditor is not careful while filing our return. Whereas I told him, and eventually what happened, they were also friend of some other clients of mine. So they told, "Yaar, be careful, this person is filing wrong returns." So I told him, I have now assessment how it has come correct. So for that also, this 139.9 also we are, but this because of the lacunas or pitfalls in the government's own system, we do face trouble at times. And one more assessment. My software generated one computation. A different return got uploaded in on the website without any. And our bad luck was that we did not even care to see whether the computation generated by our software is the same return which has been uploaded, because so many returns we are uploading, it never happens that what is screen on the screen is something is different is uploaded. Then we got a notice after 1 year. After 1 year, we went back to our software. What is this has happened? Till that time also we didn't realize there is a difference between this acknowledgement and my computation, because we don't expect that and we did not visit that area. So software people, they took our everything and they analyzed it, but they didn't provide any solution. So what has happened? My client has ultimately got 8 lakh rupees refund more than what we have asked for. So that time I visited and saw, okay, how can more refund come? Then we saw that this refund should have come. But my software generated returns, generated different reports, but the assessment was correct. So this type of situation also happening in digital time, which means I am filing for last at least 20 years, but never it has happened. But this time it has happened, that too for a very big client, whose income is in crores of rupees. So I was just thinking, if it was the other way around, then how would I have dealt with? Now see, he got more money, so he's happy. I can't tell him you got more money because I did mistake or the system did mistake. But if we get the other way around, then what happens? So now there is one more area which we need to check, that all reports generated by the softwares are in agreement with what we are actually filing.
Reconciliation is done.
Reconciliation, you have to thoroughly check it again or revise it immediately.
At least first you have to do hash totals. Match हो रहे हैं, फिर उसके then you have to get deeper into it.
Yes.
This topic.
So
this topic, I think we should have a bigger audience to have this.
This is a very big topic. In fact, if I discuss thread banner,
nowadays the practicing CAs are more dependent on software. मेरा वाइफ का छोटा सा डिमांड आया, 400-500 रुपए एक्स्ट्रा आया. मैं कभी चेक कर सॉफ्टवेयर, उनके सॉफ्टवेयर से हमारे सॉफ्टवेयर में कम है, वो कहाँ देखता रहूँगा?
कहाँ देखने जाओगे? मैं तो अभी मेरा
यार तुम एक्सेल में तो देख सकते हो ना कि उसने कंपटीशन सही की नहीं की है.
400-500 के लिए आप बोलोगे टाइम
नहीं मैं
सर वो इसलिए मेरे को भी चिंता नहीं, बट दैट पॉइंट इज कि इतने मतलब जो प्रैक्टिसिंग सीएज आर सॉफ्टवेयर डिपेंडेंट, आपने 234 ABC की देखनी है, इंटरेस्ट कैलकुलेशन सही हुई है, तो उसमें कितना अगर एक्सेल में भी करोगे 10 मिनट लग जाएगा, राइट? अभी मेरे को करने के लिए मेरे को पढ़ना पड़ेगा, पुराने जमाने में जाना पड़ेगा 234. तो तुम तो रोज का काम करते हो, बट दे आर नॉट विलिंग टू डू दैट.
सतनाम, एक्चुअली क्या होता है कि आफ्टर सर्टन टाइम लाइफ में हम लोग की एक ह्यूमन एलिमेंट बोलते हैं इसको, कि जो चीज़ें रोज ठीक ठीक चल रही ना, उसको ठीक ठीक करके निकल जाते हैं. दैट इज द ओनली प्रॉब्लम, राइट? लाइक यू नेवर एक्सपेक्ट योर सन, डॉटर, वाइफ टू टेल यू लाई, और ना तो बोलते हैं, तो क्या होता है वो टेकन फॉर ग्रांटेड होता है. तो नॉर्मल में कोई 0.01% में कहीं जाके आपको मिलेगा वो. मेरे केस में भी इन माई 40 years of practice, this is the first time something like this has happened. This never happened even when I was doing manual filing. When I go and see my working, so manual filing days, और मैं सोचता इतना काम करते थे और मेरा स्टाफ भी इतना काम करता था.
Anil sir, I have a question, and especially for tax audit. So people like me, we are not into practice, but then some of the family businesses would be there. Right?
Yeah.
Now, as you would also know that not all records are correctly mentioned, right? Which means जैसे stock का आपने बताया कि कितना रहेगा ऐसा. Especially from the point of view for filing returns, what are the 2-3 key checkpoints that the MSME should have? I'm not asking from a CA perspective, but from a business perspective.
Yeah. So
what are the 2-3 checkpoints that I should have, which would although yes, records are not there, but then that would kind of seal it in a way that things are in place.
See, I'll go back 40 years back. I was a book writer. I used to write books of accounts manually. So initially this tax audit was also not there. So we were doing all odd jobs. Book लिखते थे, GST से VAT का नंबर ले दिया, ये कर दिया, वो कर दिया, ये सब काम करते थे. तो उस टाइम में मेरे को एक कंपनी की बुक लिखने का काम मिला. तो I appointed a guy to feed Tally. That time Tally was 4. That was so I put that boy on the job and I told him, सर काम क्या करना है? मैं बोला कुछ नहीं करना है तेरे को. बोला सर कुछ नहीं, कुछ तो करना होगा. मैं बोला एक काम करना, कैशियर को जाके कैश बैलेंस पूछना और तेरा बुक्स का कैश बैलेंस मैच हो गया तो घर चले जाना. हाँ, दूसरा तेरा बैंक का जो है ना, बैंक बैलेंस मैच होना चाहिए. और तीसरा क्या था, मेरा परचेज और सेल है ना मैनेजमेंट देती थी, तो मैं बोला वो बिल फीड करके वापस मैनेजमेंट को दे देने के. तो तेरी बुक्स कंप्लीट हो गई. ऑल योर बैंक ट्रांजेक्शंस आर कैप्चर्ड, all your cash transactions are captured, all your purchases are captured, all your sales is captured. Now what I have to do is just scrutinize them and put things in place. So these are the day-to-day work. If these 4 parameters you meet daily basis, SME की accounting हो गई. उसके बाद में आपको जैसा पता है ना, GST का वो लेजर मैच कर लेना है, ITC की रिपोर्ट चेक कर लेनी है, बैंक का रिकन्सिलेशन बना लेना है, कैश का ओडी तो नहीं है वो देखना है, जो रियल लाइफ में होता नहीं है लेकिन बुक्स में होता है कई बार. हाँ, उसके बाद में आपको डेटर्स क्रेडिटर्स डेटर बैलेंस. और चौथा पैरामीटर ये कि डेटर्स और क्रेडिटर्स बिल टू बिल मैच हो रहे हैं और डेप्रिसिएशन प्रोवाइड होगी. बस और तो कुछ कहीं नहीं, ऐसे भी को कुछ नहीं ध्यान देना है. और मैं तो बोलता हूँ इसमें रियल टाइम अकाउंटिंग अगर कोई भी करता है ना, रोज का काम रोज करो, रोज की बैलेंस शीट रोज लो, ईयर एंड के लिए मत रखो. और जिस दिन क्रेडिट का
ऐसा नहीं होता ना सर.
नहीं, क्यों, बड़ा सिंपल है. रोज खाना खाने के बाद आधा घंटा पानी नहीं पीना, उसमें अपने बुक्स की एंट्री कर लो, फिर पानी पी लो, मैटर हो गया, बुक्स भी कंप्लीट हो गई, हेल्थ भी ठीक हो गई. रियली नो जोक्स. See, I'll tell you. Recently, our WIRC Vikasa took a trip of students to my client's factory. His factory, I started working 40 years back, writing his books. 200 foot का गाला था. This hall is bigger than his workshop then. Today, his workshop is 4 lakh square feet. So, that person, he manufactures shoes. He exports them. He manufactures for the world's best brands. He is the chairman of Western Indian Regional Council of the Leather Export for last 20 years. No one wants to replace him. He is done Howard MBA at the age of 67. And they have included him in the faculty of Howard as well as the faculty of IIT alumni. And he has so much energy today also that he has ventured into manufacturing pharmaceuticals at this age, and that too he's got FDA approval for his product. So what I'm trying to say is there is nothing which you cannot do. And above all this, he is that YouTuber. He uploads his own songs daily on the YouTube also. After all this, he has got some 400 employees and he has got this huge factory. And he's always one leg in India, one leg abroad, because he manufactures footwear for the big brands. So he doesn't have one production line के इधर से माल डाला उधर से बनते रहा. उसका हर product different है. Today he's manufacturing one shoe, other he's manufacturing other shoe, and still you always find him smiling. किसी को कभी माँ बहन नहीं करता है, कुछ नहीं करता है कि ये नहीं आया, पेमेंट नहीं आया, ये नहीं, कुछ नहीं. He finds various solutions. That's it. So SME is about small thing. When he can do it, anyone can do it. It's so inspiring to see him. तो अभी विकासा को गए थे, तो बच्चों ने बोला कि हमको गाना सुनाओ. He sang one song for them. And when on a lighter note, when the institute wanted to thank me for taking the students there, so he said, he's our Hanuman. He's always there when we are. So what I mean to say is not that way. After 40 years of association, if a person says you are an asset to an organization, he means it from his heart. क्योंकि 40 साल के बाद वो वाइफ को भी रिकॉग्नाइज नहीं करता आदमी, मतलब ऐसा हो जाता है. That is human nature. That is human nature. That's right. So this tax audit report, I have these notes are very elaborate, and any part anyone wants to discuss anytime, we can discuss. Why you got another about 50?
Recently there was some amendment that the F&O trades. Those उसमें turnover criteria something got.
नहीं वही कुछ नहीं. Difference is different. उसका एक ही है turnover criteria. Ignoring signs you have to sign. Minus का sign उड़ा देना है और पूरे को turnover गिनना है difference of value को.
Absolute figures को add up करके turnover बन जाएगा आपका.
वो खाली reporting purpose के लिए बस. और अभी तो वो भी हो गया ना.
F&O मतलब अगर फ्यूचर में सेल किया और परचेज किया तो
आपने समझो आपने ACC 1800 में खरीदा और 1801 रुपए में बेच दिया तो 1 रुपया आपका टर्नओवर है. बस दैट सिंपल.
अच्छा अभी दिस इज अ चेंज.
पहले से ही है.
नहीं फ्यूचर एंड ऑप्शन में
नहीं ऐसे ही.
This is there in the guidance note. This is a simple example. So take the sum of the, maybe you can articulate better so he understands. So the sum of the differences.
आपका जो F&O का रिपोर्ट आता है ना ब्रोकर से उसको फिगर्स लेने के उसको कॉपी करने का एक्सेल शीट में और उसको माइनस साइन को डिलीट करके बोलने का उसके नीचे का टोटल लगाने का दैट इज योर टर्नओवर बस. और फिर उसमें अगर आपकी ओपन पोजीशन थी उसको ऐड लेस करना है और उसको बैलेंस शीट में स्टॉक में दिखाना है.
I'm talking about the stock. I'm saying the turnover thing.
Turnover that way only, the way I explained.
1 rupee.
No, yeah, 1 rupee or you have to just take that report F&O and
per trade 50 loss हुआ 50 profit हुआ तो 100 turnover होगा.
Turnover 100 है profit 0 है.
Okay. But even last year it was same or this year
Every
only
year.
changed now?
Always it was same. दुबे जी आपकी क्वेरी SME की है ना. SME का टर्नओवर बड़ा रेलेवेंट है. If your turnover is less and you are proprietary 2 करोड़ के नीचे है तो 44 AD है आपका.
Yeah, that is fine. People coming in this tax audit, the 30th.
Tax audit 10 करोड़ का लिमिट हो गया है. अगर आप डिजिटल ट्रेडिंग ही कर रहे हो तो टैक्स ऑडिट है ही नहीं 10 करोड़ तक.
5 करोड़ के ऊपर
नहीं 10 करोड़.
5% से ज्यादा कैश पेमेंट कैश रिसिप्ट नहीं है तो
एक स्पेसिफिक SME का स्पेसिफिक इशू होगा. जैसे एक इशू आपको बताता हूँ न्यूज़पेपर वाले का होता है. न्यूज़पेपर आता है 5-6 रुपए का. उसमें मार्जिन 4 आना होता है तो उसका 5% भी प्रॉफिट नहीं होता है तो 44 AD में फिट नहीं होता वो. तो उसका ऑडिट करना पड़ेगा अनफॉर्चुनेटली.
8% से भी नीचे.
हाँ. फिर आता है फॉर्म्स के लिए. फॉर्म्स के अंदर रेम्यूनरेशन और इंटरेस्ट इज नॉट ए डिडक्टेबल एक्सपेंस फॉर 44 AD टू पार्टनर्स. तो वहाँ पे ऑडिट आ जाएगा आपका. लेकिन उसके अंदर भी एस्केप रूट है कि अभी 10 करोड़ तक है तो आप 44 AD में जाने की जरूरत नहीं है. आप बुक्स ऑफ अकाउंट्स बनाओ और रिटर्न फाइल कर दो. So now that is very simple.
The point is, sir, that no one maintains actually books of account.
It's very simple. It is just like that. I'll tell you. What time you get up in the morning?
I get up at 6:30. 6:30.
6:30. Correct. तो अभी भी अगर आपको टाइम नहीं मिलता है ना, you have an option. You can get. No. I'm just telling an example. सपोज आपने कोई भी SME है उसको टाइम नहीं मिलता है ना. मैं जैसे अपना एक बताता हूँ कि when I was doing that job of writing books of accounts, I was having my own office in South Bombay. So I had to reach there also by 10 o'clock because then I have to go to income tax. I used to go to ITA2 also and I had to appear before CIT appeals also. So when to write the books of accounts? My this daughter, no, she was that time 2nd or 3rd standard maybe. So I used to get up at 5 o'clock in the morning and I used to make my cup of tea and 2 hours, 5 to 7 I used to write books manually. So that is how I used to find time. Because after 7, they used to get ready. I used to drop them to school, then come back, then go Churchgate all the way. Then full day I was in income tax, this tax, that tax, client, blah, blah. 8 o'clock close my office, 9 o'clock come home. Then you have to find that time, Everyone has time.
But there is a category now to address this issue. There is a category for presumptive taxation.
Yeah.
That is.
So very clearly, no need to maintain the books of accounts. What are the limits for that?
2 crores.
Yeah. So that is for turnover up to 2 crores. There are businesses, for example, even if you have a sari shop, turnover goes up to 2.5-3 crores.
How to share this with our participants?
So you have addressed presumptive taxation. How?
No, this doesn't come under tax audit.
What?
You have issued of tax audit, no?
Yeah, this is only.
No, that's updates, no. But if there is an issue, you should be able to address it, no.
Personally address them.
That was a.
If you can do it now, it's better.
No, I'll have to make a note.
But you're not prepared.
No,
you're told to prepare. No, but you're told to
in my earlier presentation, it is
No,
there.
but you don't remember.
No, I can tell any question, but
Yes.
Okay. Chalo. Okay.
So wind up for the day?
Yes.
So, thanks, Anil.
Okay, thanks.
Jiminagar.
Yes.
आपको मिलता हूँ.
Yes, anytime. Please.
Anupam, over to you for the pleasant task.
Thank you, Anilji.
Thank you.
For excellent presentation. I mean, I can relate to it because I work a lot in manufacturing. So when you say stock loss, the tracking and everything, that is important. And especially, I like that one line, no? That knack of answering the question.
Yes.
I think that's what defines
इसमें क्या
the
है?
experience.
बताना तो बहुत कुछ है लेकिन छुपाना क्या है? That's important.
And this is becoming very difficult, especially now in faceless, because sometimes your answer stupid. I mean, I have seen that one answer which was not perfect in this company in last year, so got accepted, and one which was genuine fact, he asked for again clarifications and goes on and on. So, hey, thank you sir. Thank you, Dobin. Thank you.
Thank you, Manoj ji. Thank you, Anil ji.
Okay, thank you.
Well done.
Thank you, boss. ये निकाल लो ऐसे ही?
Yeah.
ऐसे full it? यानी कभी-कभी प्रॉब्लम हो जाता है.
हाँ इस पे.
Yes.
Navratna.
नवरत्न जय.
Marwadi.
और सर?
हाँ?
Which sir?
Sony.
Sorry.
हाँ?
Sure, sir. Thank you.
Nice
meeting you.
Thank you.
Thanks. Good.
Where you stay?
Kalwadi.
I had an office there.
अच्छा.
कियानी बेकरी है ना?
हाँ.
उसके सामने की गली में महावीर मेंशन में second floor.
अच्छा.
But some 20 years back, when e-filing and all started, I winded up myself. हाँ मैं आप बोलिए. Okay. चल साथ में चलते हैं. I got car. We'll go together. चल.